There we go. Had to unmute the YouTubes. What's going on, guys? Good morning. Welcome to the room. Hey, Bajoy. Great to see you. Bob B. the man, the Dalai Lama of day traders. Good morning. Nice to see you guys. Hope everybody's doing great. Hope you're happy. Hope you're ready to, I don't know, maybe kick butt, chew bubble gum, but we are all out of bubble gum, guys. So we're just going to have to kick butt. Kind of what we do. I'm so stoked today. Big congratulations. I'm going to make sure it's on YouTube. John Novak, the funding company, is officially launched as of last night, guys. It has been a huge endeavor. Very proud of my big brother, so I just wanted to throw that out there. Good morning. Thanks, Luciano. We are excited. I've been working that trading view all morning long. I'm enjoying it, but it's from the foundation that I built, guys. One of the things that you'll find is that when you build a solid foundation, when you choose to grow from that solid foundation, man, everything's possible. It's pretty cool. And that's what we're going to do today. We're going to talk about the best of the best, the easiest, the coolest. And Luciano, let me help. Let me help. Guys, I can't stress that enough. As you learn these things, I've spent the last 6 months learning these things. Let me see if I can help you on it. But we're focused on NinjaTrader this morning. We're focused on Nexgen software services, and I'm pretty excited about doing that. One of my favorite things. Good morning, Better Dad. Today is Thursday, May 29th. I can't believe it. It's almost June. And at 8:30 a.m., guys, we had some news. We had unemployment claims. We had preliminary GDP, had some medium impact news, and we had stuff that could move the market. And I'm not sure what your market did, but my market went right up. Like building a rock versus building on sand. You read that somewhere. On a rock, yeah. It was Monty Python, Ron. He built a castle in the swamp and it sank. And then it sank again. Then it burned down and sank. And then the fourth time, it finally worked. So, guys, every morning I'm checking news just because all we do is trade patterns. We're looking for the market to do what it does. We're looking for the market to repeat a pattern that is testable, that has been proven to win more than it loses, that offers an edge when the pattern is true. And one of the things news can do, specifically high impact news, it can disrupt your patterns. So every morning, take a second, stop by, sip some coffee. Make sure that you're not trading into that red news because it very often ruins your good time. All the stuff I talk about, you can find it on the Nexgen page, guys. No secrets. Don't want to keep secrets from you. And to be completely honest, I'm going to give you everything you need to be successful with this software by the time we walk out of here today. That's my promise to you. But what we're going to focus on to get you there and get you there the absolute fastest is what we call a high probability trend trade, guys. This is the first trade that we talk about. It's not the only trade that you can do with the software, but when you learn how to execute this high probability trend trade, what happens is you begin to see the other trades. You begin to see the other opportunities. You open the doors to manage differently, to create your own plan. So we're going to focus on this trade because it's a trade that typically wins 70 to 80% of the time. One of my favorite sayings is confidence comes from the memory of success. And guys, the more confident you are in your trading plan, the more trust you have in the methodology, the more likely you are to focus on the execution of the method because you realize that when you have something that wins 70 to 80% of the time, you are also in possession of something that loses 20 to 30% of the time. So adhering to a plan, focusing on the pattern, following the rules, guys, it's going to help remove a lot of the emotions that are commonly found in day trading because you'll know every time you enter the market, you have an edge. So this high probability trend trade, what it's going to do is it's going to teach you to recognize that edge. It's going to teach you to read your charts. That's the goal of the first hour. And honestly, if I had to put my job description on a resume, I teach people to read indicators. I teach people to look at a chart so that they can understand where the market is likely to continue, where it's likely to go, where it's likely to stop. And they're going to do that through their chart reading, guys, because chart reading is 90% of your day. 10% of your day is going to be actively trading, getting in and out of the markets, taking advantage of that pattern that you're recognizing. Good morning, Cav. Great to see you in here today. I do like to remind you guys, this is just kind of funny for me, but we've all been there, There's day one. It feels like there's a lot of information coming at you. I know that it does. It's like that with me anytime I learn something new. But the reality is, guys, is it's very simplified. It's very streamlined. And if you give it a day or two to learn the language, by the third day, things click, and then you start to see um, what it is we're talking about and how you can execute these amazing trades. And you're going to do it with some indicators. So before we even talk about rules, before we even talk about patterns, we're going to talk about the tools that we're using to get there. You're going to see trigger lines as you look for this trade. There are small trigger lines. These are two solid lines. They work together to create those small triggers. When they are green, those trigger lines are going up. And when they are red, they're going down. You're also going to have large triggers. Large triggers are going to have dashes on them. They're going to be a little wider. And these large triggers, again, when they're green, they're going up, and when they're red, they're going down. These trigger lines are going to work their way into every rule. They're going to work their way into rules 1, 2, and 3, the momentum, the path, the entry. Just know the difference between the two. And then you're going to see areas. Areas come from a couple different sources. You don't need to know how they're created. You're going to see divergence, highs, and lows. So anytime you hear the word divergence in this classroom, anytime you look at your chart and you see a magenta line coming off of a pivot from a high, a cyan line coming off a pivot from a low, I want you to say to yourself, man, there was a loss of momentum right at that number. There was a loss of momentum right at that pivot. And that's all the divergence is. It just means that they're losing momentum in their push. You're going to see it on both charts. You're also going to see red Fibonacci resistance. This is the good stuff, guys. These key Fibonacci areas can stop a market. When the market is trending up, these are the areas where the market may bounce, where it may reverse. And then Fibonacci support is the exact opposite. When the market is trending down, these are those potential bounce points. We're going to teach you how to recognize them, how to use them to your advantage. You're going to see yellow 1-to-1s. These can behave as either support or resistance. If the market's trending down, they may behave as support, putting a floor in. If the market is trending up, they may behave as resistance. And then finally, you're going to see that mid-band. And that mid-band is just going to cruise through the middle. It's a moving average. When it's magenta, price is below it. It could behave as resistance. And when it's green, price is above it. It may behave as support, guys. Again, the areas are going to come into rule number 2 and rule number 3. All you need to know is the names. And then it only takes 3 rules to use those indicators to recognize an advantage so that you can enter the highest probability trend trade. When a rule is met, when it's true, when it's factual, large chart needs strong triggers, rule number 1. When this is true, and I do in fact have strong triggers, I have the advantage of momentum down here in yellow. When there's no termination conditions, I have a clear path. And guys, when my entry area is clearly defined, I have the advantage of entering where the market is most likely to continue. So for the brand new user, for the day 1s through day 30s, I think, a trade, the recipe for a trade is momentum first with the addition of a clear path. And then when these two are present, go define your entry area. And what you're going to find is that this recipe, looking for advantages, speaking out loud, I have this advantage, scaring your cat. Guys, once you understand momentum and path, once you can identify a strong trigger, once you can recognize when you're no longer near those trouble spots, this is all you need for a very solid plan. This is all you need for a very consistent plan. You're going to see trades in this room that rely solely on momentum and path. And then this entry area, this is specific to trend trades. You're going to see a lot of entry areas once you understand the first 2 concepts. So what I'm going to do this morning is I'm going to break down each rule individually, exactly what it looks like, what it means to you, and even where to find it. The rules are met on only 2 charts. There is a large chart first. The large chart leads the way. The large chart sets the tone. It's a very slow moving chart. It's a broad stroke of a brush. It gives the overall opinion of the market, guys. And it takes 1 bar, the most current bar. That's it. You'll be able to define direction, momentum, and areas. Rules 1 and 2 will be met on this bar before you ever go look for an entry. But when it's time for an entry, we go to the smaller chart, the faster chart. This is a refinement chart. Because inside of this 1 bar on a big slow chart, there's 20 to 30 bars on this smaller, faster chart. It's the same price, the same market. You're just seeing the movement within that big bar. We use this smaller refinement chart to define entries, to reduce risk, to maximize profit potential. So have your grandmother knit it on a doily. Large chart leads the way, guys. Large chart sets the tone, and I only go look for an entry when the large chart tells me that it's time. We use these two charts, one of my favorite metaphors. Who are you trading with and who are you trading against? One of the best things you can do as a new trader, as an old trader, just as a trader in general, is realize that you're not in control of what the market does. You never will be. You'll never understand what's going to happen next, but you can recognize patterns. And when you let the large chart, the large crowd, if you will, set the tone and get those patterns in motion, it makes it easier because the large crowd typically wins. These are the men and women with the money and the influence, guys. They create trends, they establish momentum, they react at those areas on the large chart. The small crowd, these are the fighters. Some of you like to be in the small crowd. They still have more money and influence than you ever will. They can create what's called a retracement, a little push against everything that the large crowd wants. Hey, good morning, Sid. Good to see you in here. Rule number 3 is designed to pinpoint, to show you exactly where that small crowd is most likely to fail in their fight. And these men and women typically lose 70 to 80% of the time. So if you trade with a large chart, if you let the large chart define direction, momentum, and areas, rule number 3 puts you in where the small crowd is most likely to fail. That happens to be exactly where the market is most likely to bounce and continue with everything that the large crowd wanted. So we are going to learn those trigger line, those Fibonacci rules for when it's okay to trade. I really want you guys to say to yourself, it's okay to trade when my rules are met, because my rules define a pattern. They show me a pattern that's been proven to win more than it loses. When my rules are met, I have an edge. That's when it's okay to trade. If my rules aren't met, that edge is gone. And now I'm relying on hopes and wishes and wants to get into the market, to find success. My father-in-law used to always say, wish in one hand and poop in the other. Tell me which fills up first, guys. Trading's very much like that. It's better to have that edge than to see which one fills up first. There's a path to becoming a confident trader, ASAP. This is the most fought path that I've ever seen in my life. I fought it myself. I don't know why. Alpha male, I want to be in charge. But guys, simulate, practice, take a million pictures and post them in the room for feedback. Every time you take a trade, drop it in the room. Tell me what you saw. Tell me why you did what you did. And what happens is you get a private session with me. So for example, if you post in my room, you're going to tell me, hey, Mark, this is what I saw, momentum and path. I had a clear path, nothing in the way, and I found a way to get in and get paid, right? Momentum and path, what a concept. That's wisdom right there, guys. Once you have strong triggers and nothing in the way, it's pretty easy to find a way to get paid. And that's exactly what Pete posted in the room. If Pete had made a mistake, if Pete had fought momentum, if Pete had traded into an area, well, then that conversation would have come in and we would have said, hey, Pete, guess what, man? There's an opportunity for you to have a little less risk, a little more profit potential. There's a little bit of patience that would have produced better results with a little less stress. Here's how you do it. Pete knows that. Pete is an expert trader, and he still posts in the room every day to make sure that he doesn't miss anything, guys. I do the same thing with John Novak. Every trade I take, I post in a Teams meeting with him. And we analyze it and make sure that we're not missing something. And guys, that's one of the beauties of Nexgen, is you'll get that feedback every day. The goal is that you're trading the correct rules. You're practicing the correct rules. You're not just looking to make simulated money and buy a simulated house and a simulated Ferrari, maybe even pick up a simulated girlfriend. Guys, you can't do that. These are your batting cages. This is your driving range. Practice, create the muscle memory that's going to bring you success. And then simplicity has been my battle cry for 5 years, guys. I am a right brain, artsy fartsy, free thinking kind of guy. I'm not a technical guy. I don't understand math very well, but I do understand patterns. So simplicity Looking for the pattern typically pays dividends for the average person. I'm going to hand you a plan. The plan is going to have two trades on it. Both of these trades have been proven to win more than they lose. Specifically, the first one, the high probability trend trade. Your percentage goes down once you get outside of that range, but it's okay. I've seen people win 40 or 50% of their trades and still be profitable with some good management. That's the second half. You need to learn what looks you're going to commit to. What's it look like so that it becomes easy? So to facilitate that effort, we created the spreadsheet, guys, and it has 4 tabs on it. The first tab, strong triggers, clear path, high probability trend trade entries. This is what it looks like individually, those 3 rules when the rules are met. And then the red section is what it looks like when the rules aren't met. This is your, hey, let me pump the brakes, sit on my hands. Maybe I'm better off not trading without that advantage. So you're gonna be able to learn these individually and then piece them together to create a trade. The second tab is you guys doing just that. I steal a lot of pictures from you guys in the room when they're perfect. I'm looking at a lot of names in here, and I'm pretty sure I've stolen pictures from all of you. And if I haven't, I bet you that I will. This is Nexgen users, over 500 pictures, using momentum, using path, using entry, finding a way to capitalize, but more than anything, trading the patterns, trading the patterns that win more than they lose. And guys, I am so focused on patterns rather than results. You'll see in the spreadsheet that sometimes the perfect trades don't work. It's a cost of doing business. Anything that wins 20 to 30 or wins 70 to 80% of the time, it's obligated to lose 20 to 30% of the time. It doesn't mean that the pattern's wrong. It just means that you're paying a little cost of doing business. So focus on the execution. There's the entry sequences, there's ways to manage and things you're going to see when you get good at reading your indicators. Your job is to start taking pictures. Pictures get you where you want to be. Pictures, when you annotate them, you create a correlation between what you see with your brain and your eyes and what it means to you in terms of advantages. So as you begin to study this high probability trend trade, flood this green section with pictures of them. We did one yesterday, something that happened in the market. And what we did is we didn't just take a picture, but we took a picture and we described exactly what it means to have those rules met, exactly why we would ever go look for an entry, and exactly where you would take that entry. So this becomes a guide. Here's your pattern, exactly what you're looking for. And what that does for you is it slows the market down because now you're anticipating the pattern. You know where you have to enter, you know what has to happen, and you're just waiting. You're a professional waiter waiting for that edge to come into play. I love to help people with management. Guys, you're going to develop your own management plan. I'm going to give you one in the beginning, but as you begin to grow outside of it, take a lot of pictures. Let the visual of how you're going to manage work its way into it, and then you're going to start to see patterns. And then there's the trade tracking sheet. This one, if used properly, will speed up the educational process tenfold, guys. And all you have to do is take a picture of every trade, drop it into the spreadsheet. I encourage you to talk about whether or not you had momentum and path. What you're going to find is that when there's an in one of these spots, the trade is instantly less likely to work. It's the craziest thing ever. Because when you have momentum and path, it's hard to stop a market. When you sacrifice one of those, you're going to have to manage a little more aggressively. But the most important thing about the spreadsheet isn't necessarily taking the pictures and dropping it in. Guys, come back to it the next day. Study everything that you did yesterday. Look at it. Ask yourself what worked, what didn't work, what felt easy, what was relaxed. And what you're going to do is you're going to see the patterns in the market that are bringing you success. You're going to see the patterns in the market that are taking that success away from you. But it's going to become easier because the feedback from class is going to focus not only on the positives. Guys, I'm a celebrate and high-fiving kind of guy, but we're also going to point out the challenges that are going on in your trade. So maybe you have a habit of trading into termination conditions. Maybe you fight trigger strength. Maybe you're in too early, you're out too late. Guys, you're going to see that in the feedback. And when you come back and really look at it, It's going to prepare you for the day. It's going to get you focused on the things that are bringing that success, that are making you feel good. And it's going to let you know exactly what you need to focus on avoiding. For me, it was trading in determination conditions. Bob B. the man put his hand up too. He and I are two peas in a pod. Some of you love to take momentum trades without momentum. You're going to see that in the feedback. All the things, I don't just say, hey, good or bad. I say, here's your fix. If you're having a challenge, here's your fix. Here's how you fix it. So the feedback from the room, guys, that's what took me next level. I was in the room just like you as a student. It is the easiest way to blow out a funded account. And Bob, they let you get lucky on sim, don't they? They let you get lucky on sim. They let you trade into those areas on sim, and then once you go live, it's like the rules are the gospel. And man, so I'm sorry you blew out a funded account, but I think you got a great lesson out of it, I bet. And the feedback in class, Bob, was you keep trading in determination conditions. So you knew that it takes a while to believe it. That's okay. So what we're going to do, guys, over the next hour, I'm going to warn you right now, I'm hyper caffeinated. My wife brought me a third cup of coffee, and here we go. We're going to learn these trigger lines. We're going to learn these rules. We're going to study these rules. We're going to commit to these rules. You guys practice and flood my room with pictures, please. I take about 30 pictures a day, easily 30 pictures a day. I would encourage you to do the same. Annotate all of them. You'll be floored at how quickly you move forward. Keep it simple. The plan that I give you is the KISS plan, the Keep It Simple Sunshine plan. Learn the looks, learn the patterns. And Bob, it's okay to start over. It really is. I don't think there's anybody that's ever gotten funded that didn't blow out that funded account at least once. I've done it 4 or 5 times, unfortunately. And do you know how it happens? It happens because I break my rules. My losing days, and you'll get this with a little bit of time under your belt. When you start giving these things up willingly, hoping for wins, that's typically when challenges happen. The most successful traders I've ever met have taught themselves to do nothing when there's nothing to do. And that really is true. 90% of the day, guys, it's waiting, it's being patient, it's insisting on an edge because it's your money, right? Your money is worth an edge. Nobody ever goes to the horse track and bets on the 3-legged horse, right? But when you break your rules, you are betting on that 3-legged horse. So let's get through these rules. Straighten your crown and go meet the masses. Amen. I like that. So guys, the large chart, the big chart, the slow chart, the large crowd. How do you want to say it? Whatever makes you believe that this is where you start, guys. The large chart needs strong triggers. That's going to give you the advantage of momentum. It's rule number 1 for a reason, guys. In order to have strong triggers on your large chart, this has to be true, guys. You have to be trading with the trend. You can't fight the trend and have strong triggers. So when the background is green on your large chart, it's an uptrend. Pretty simple. When it's red, it's a downtrend. If you're colorblind, I know this sounds silly. If you're colorblind, let me know. I'll teach you the recipe for what paints the colors, and you can use trigger location. But the only way you can have strong triggers in an uptrend, ladies and gentlemen, is if your small triggers are green, if your large triggers are green, and if your background is green. As soon as these colors don't match, rule number 1 isn't met. That's a pretty good safeguard. What it means to have strong triggers, whether it's an uptrend or a downtrend, it's just separation, guys. So in an uptrend, small triggers have broken away from and above the large triggers. Large triggers need to be wide. There is no boogie in flat triggers, somebody said in this room once. So you want them getting wide, whether it is up or whether it is down. And guys, it's that separation between the small and large. Let's do some painting. This is my favorite thing to do. Guys, strong triggers looks like scissors that are open. Strong triggers must have separation because when scissors are open, guys, you can cut, you can get work done, you can make things happen with open scissors. I think we're there. We're back on YouTube too. Awesome. Here we go, guys. So rule number 1. Haha. Dun, 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 dun. There it is. Strong triggers. Forgive me for the interruption. but it happens sometimes, right? Strong triggers is a pretty simple recipe. When there's separation between the small and large guys, you have strength, whether it's up or whether it's down. And when those small triggers work their way back inside of the large triggers, you have weakness. And weakness, whoops, tried to turn on my camera. When you have weakness, when those smalls work their way back inside of the large, ladies and gentlemen, anything can happen up or down. So when we talk about the advantage, we're just saying momentum, but I want you to think odds favorable momentum. I want you annotating on a chart, OFM, because when you have strength, let's get my little pew pew pointer on here. When you have strength, when there is separation, when the colors match, the odds are favorable for the market to continue in the direction of the trend. This is the look that can break key Fibonacci areas. This is the look that can push a market. Guys, when you have that separation, it'll even cover some of the mistakes that we tend to make as new users. Once that separation goes away, once those smalls return, guys, this is where you start to see retracements from the middle of nowhere. This is where key Fibonacci areas tend to hold. So brand new users, I want you to let it be really simple. You either have separation defining the strength, or you have weakness, letting you know that anything can happen. And even with Fibonacci pulled off of this screen, guys, it's not a coincidence that you had weakness in trigger lines every time that market reversed, 4 out of 5 times. And that's kind of the feeling. Weakness, anything can happen. And there's times where momentum gets stopped, but more often than not, momentum pushes a market. So rule number 1, guys, it puts you behind the wheel of a loaded semi with a tailwind going down the highway at 120 miles an hour. It's hard to stop. But there's things that can. We call them termination conditions. These are those likely to stop areas, guys. And rule number 2, when true, is going to make sure that you have room to your profit targets because there are no termination conditions present. We're just going to call it a clear path. You can annotate it on a chart, CP, clear path, guys. So we're going to take that momentum and we're going to couple it with absolutely nothing in the way that can create a bounce. Areas that can reverse the market, that can create untradeable bounces. They're Fibonacci indicators, and we're going to let the trigger lines let us know whether or not we need to be wary. So we're going to be looking for divergence highs, divergence lows, Fibonacci resistance, Fibonacci support. We're going to look for yellow 1-to-1s, guys. These are the places on a large chart. Let me open up S&P too. These are the places on a large chart where that large crowd are making decisions. These are the key points where when the buyers enter right here, they know where they're taking profits. When the buyers are pushing up, the sellers know where they want to enter and go short, guys. And rule number 2 is going to keep you out of their fight, the buyers and sellers. It's going to keep you out of their decision-making process. So if you believe, and you should, it's whether it's a fairy tale or not, if you believe there's a magical large crowd that's making decisions at these areas, and there is, guys, you got to let the market get to the areas. That's the first step in identifying a termination condition. Price reaches the area. Price bars, dynamic Renko bars come up and they get to Fibonacci resistance, or maybe they're working their way down with momentum, they begin to weaken and they get to Fibonacci support. When price reaches an area, the only thing that you need to do is ask yourself, where are my triggers? If you reach resistance, we're done with price, we don't need it anymore, your trigger lines are going to tell the story. And if they remain below resistance, resistance is a termination condition. Price reaches Fibonacci support, we're done with price, we don't need it, the trigger lines are going to tell us everything we need to know. If the trigger lines remain above Fibonacci support's a termination condition. Rule number 2 says absolutely no trades into an area. So if you trade into Fibonacci resistance with the triggers below, it's more likely to bounce to reverse to put you in a fight that causes you to lose money. Same is true of support. This is what it looks like on the first bar. The market may be screaming up. You might even be in an order or in a trade. But once price reaches Fibonacci resistance and the triggers remain below, your rules say absolutely no more trades into that area. Does that make sense, everybody? This is your safeguard. This is the one that's going to keep you in that 90% of doing nothing. This is the most broken rule by new users because this is the one that's going to force patience. And you'll know about these areas long before you get to them, and you'll be able to say to yourself, I'm in a long position, life is good, this area could stop the market, what a great place to get paid. Clear path is what we're looking for. And a clear path simply means that there's nothing in the way. So if price reaching resistance or support is the precursor to a termination condition, price reaching absolutely nothing in the way, that's what begins the clear path. But what you're going to do to make sure that we're clear of decision-making zones is you're going to let both the small triggers and the large triggers get through whatever area was problematic. So what you see here is price reaches resistance. Small and large triggers are still below. It's going to take a little patience. You're going to pump the brakes. You're going to say, hey, I have no idea what the decision's going to be. Let me wait. Once the small and large get above resistance, resistance is going to behave like support. That area is broken. That path is clear. Excuse me. And your path remains clear until you hit the next area. When we break areas, we call this a breakout of Fibonacci. And you can find opportunities with momentum and path beyond the broken fib. You're also going to end up with a clear path from a reversal sometimes. So the market goes up, it hits resistance, resistance stops the market, the triggers can never break, and then they turn. And they give you that odds favorable momentum, and there's nothing in the way. And guys, this is a clear path coming from a reversal, and that clear path remains clear until you hit Fibonacci support. And the easiest way to make money with this software, I believe, is when you have strong triggers, guys, when you have that advantage of momentum and when there's no termination conditions. So you're just looking for room to get to the target. And if they get to resistance, not looking for that next long trade, waiting for it to break. And guys, keep it that simple. Let it be a termination or let it be a clear path. And what you're going to find is that the easiest money is buying or selling a pullback with odds favorable momentum and a clear path. These tails on a large chart, that's that fight on a small chart. It literally on the small chart looks like 30 bars going up, bouncing, and coming down. Excuse me. On your large chart, it looks like a tail. All that movement, you're going to be predicting and pinpointing right where these tails are most likely to form using rule number 3. Those tails don't mean much though if you're trading in determinations, if you're trading without momentum. So rule number 2, and I wanted to put this picture in here because you guys with experience probably know this, chop and consolidation. We hear those two words a lot, usually with traders that aren't finding the success that they want. Chop and consolidation is one of the easiest ways to drain an account. Trading in determination conditions, rule number 2 not met. Rule number 2 is going to define that chop. It's going to define that range that the market needs to break out of. And what's cool is when it does, when you get that breakout, when the small and large get above the fibs, when you have that momentum, you're going to be able to capitalize on that breakout and hopefully take momentum up to the next key area. It's the 90% of doing nothing, waiting for your advantages, that sets you up for the easy trades, for the easy success. So we are not pro day traders, ladies and gentlemen. We are professional waiters. Is everybody good with that? Can you give me a why? If you're comfortable with the idea that you don't have to trade into areas, that you'll be able to identify them long before you get to them. And guys, it is the most broken rule. Check this out. Fibonacci support to the tick, even with odds favorable momentum. And that's where everything reverses. Weak triggers, that's where it reverses. Weak triggers, that's where it reverses. Guys, look at how easy it is to recognize when you don't have an advantage, right? Small and large didn't get above the area didn't break, and sure enough, they push right back down to key Fibonacci areas. I love it. There is one termination condition, ladies and gentlemen, that I will accept on a small chart. Only one. I don't let one line on a small chart scare me. Guys, I don't even let a loss of momentum on a small chart scare me. Three divergences in the same price range. If you'll remember, divergence means loss of momentum. If I get three losses of momentum on a smaller, faster chart, that's the small chart giving me a heads up that things may be changing on that big, slow chart. Inside of this one bar where it looks like I have odds favorable momentum, I'm going to see the fight, I'm going to see the loss of momentum, and I'm going to say to myself, these three divergences can ruin my good time. These three divergences might create a deeper retracement, could undo all the strength, and let's see if we can find an example of it. Well, there's a lot of them. You'll see these three divergences very often before a deeper retracement. There's a good example right there. 1, 2, 3, actually 4. And from right there, that market pushes up, and that was right at 801. And even though you think the market's going to go down, you believe that momentum's going to push it, the small chart can give you that heads up. Todd, you break that termination condition rule daily? I think we all do in the beginning. I really do. I think everybody in this room, if they tell you that they didn't trade into termination conditions as a brand new user, they're trying to hide something from you. If they tell you they don't take losers, they're trying to hide from you. If they don't post their losers in the room and they're trying to make you believe that all they do is take winning trades, they're full of crap. So Todd, what I had to do is every time I wanted to take a trade, I'm going to share the secret that fixed me. Are you ready? You're going to love this. It's almost too simple. If I'm looking at the market and I have momentum, right? Every time before I take a trade, I would ask myself, I would literally take a picture of the chart before I ever entered the market. I would take a picture and I would say, did price reach an area? This was my fix. So I'm looking at the most current bar, I see momentum, life is good, and I always ask myself this question. And if the answer was yes, then I had to stop. I had to say, well, my gosh, it reached an area. And the thing is even when it pushes up or pushes down, so like right here, I would have to say, did price reach an area? And it did. It very clearly reached Fibonacci support. And then I go into that second part, where are my triggers? And Todd, it just built patience on me. Had all the momentum. Did it reach an area? It did. Let me be calm. Let me wait. Let me see what happens. I'll find my trade. And once you believe that the next trade is coming, once you're convinced that the market doesn't give you one opportunity and then just close down, shut its doors, kick you out, that's when the patience really comes in, guys. So momentum and path, let it lead the way. Learn them, study them, commit to them. Hey, Ronnie B, glad you could join us today. And once you understand these two concepts, once you can look at your large chart and say that these are true, ladies and gentlemen, you have the keys to the kingdom. The first way to open a door is going to be with that entry area, with that pullback to an area inside of triggers. Your entries are very precise, your entries are very specific, and there's some very definite language that goes to identifying them. So it begins with the large chart rules being met. As long as you have strong triggers and a clear path, it's okay to go look for an entry. You've got those core advantages. You've got a market that is screaming down with absolutely nothing in the way, guys. It is a free fall. Does the background have to be the same as your trade direction? Which background, Jared? Big chart or little chart? I want to make sure that I answer correctly. Big? I would say yes, because if you're fighting the background color, Jared, as a brand new user, you're fighting the trend. It means that if the background is green and you're trying to go short, what that means, and let me go to the large chart and I'll show you. When the background is green, my smalls are above my large, which means that I could never in any instance have the momentum I need to feel confident that the market is likely to continue in the direction of the trade. Does that make sense? Now, this is for new users. Remember, Jared, my job is to keep you as safe as I can as a brand new user. Does it mean that you won't one day find a way to capitalize, maybe going against the trend? Not at all. Because when price reaches this midband in this Fibonacci area and your large triggers are more than a full bar away, there's a pattern, Jared, that says, hey, look, we may close the gap. Yes, but we're looking at support on my example. Okay, small. So let's go through it like this. And let's take the first two lessons on the most current bar. Jared, if you ask yourself, do I have momentum? Do I have strong triggers? You have to answer no. Background is green. Smalls are red. Large are flat. No advantage here. Does that make sense? So there's my first thing. And I have to say, I just don't have an advantage. Do I have a clear path? And I know that we're talking about going either direction, right? Do I have a clear path up? All my triggers below resistance? I don't. Do I have a clear path down? All triggers above divergence low? No. So Jared, what you're going to do is you're going to say to yourself, son of a gun, I don't have momentum or path. I don't know why I'm even looking for a trade. And Jared, this is for the brand new user. This is for the I'm trying to get my footing down and really give myself the best chance of success so I can be confident moving into it. So if you ask yourself these two questions all the time, you'll realize that there's no trend trades to be had because there's no momentum pushing the market in the direction of the trend. There's stuff in the way that could stop a trend. As you grow with the software, guys, and this is why we've become chart readers, one of the patterns that you'll see is anytime price comes and hits one of these areas, but your large triggers are so far away, one of the gospel truths about price and triggers is they always come back together. They always come back together. You're going to see it when we go through entry rules. So you may find a way to short the market up here to close that gap. Does that make sense? So even though everything is green, your indicators are telling you that the pattern is that it may close the gap. And then when you get down to this termination condition and your smalls are above the large and everything is green, we teach what's called an HVA trade that gives you the opportunity to get in close to that termination condition that's already showing change on the chart. Does that make sense? So does it have to be the same color? Of course not. It doesn't. But for the high probability trend trade, it absolutely will need to match colors. As you grow with the software, Jared, and this is one of the challenges that we run into, it's like buying your first food processor. You're going to use it to chop cucumbers, and that's it, because that's all you really know how to do with it. By the end of the first year, you're making sausage, right? By the end of the first year, you're julienne and potatoes and making au gratins, and you're doing all these things with the experience that you've gotten with that new tool. So right now, we're learning how to swing the hammer, the most efficient, the most effective way. And I want you guys to understand that what I'm teaching this morning is not the only way to trade. This is the first way to trade because it gets you in tune with recognizing some advantages. And once you know the advantages that create the best trade, you can begin to find the trades outside of the best trade. So how is that instead of just saying no? I like to go through. I want to make sure that you guys understand that there's so many opportunities. We're just talking about the best of the best right now. And it starts with this amazing entry when you have momentum and path. Because inside of that one bar, you're going to see a reversal bar on the smaller, faster chart. That's the beginning of the fight. You're going to know where that fight's most likely to go using those large triggers. That goes back to the idea that price returns to large triggers. So you're going to define the retracement zone right here, and you're going to be able to see where it's most likely to bounce with the areas inside, guys. And it takes one bar on the large chart to know that rules 1 and 2 are met. And inside of that one bar, you're going to see the reversal, the pullback, the bounce in a successful trend trade. And that's what we're doing right now. Committing to large chart advantages, giving yourself the best of the best. And we're just going to go refine it and pinpoint where the small crowd is most likely to fail. So I'm going to go through entries both long and short from start to finish. And this is the entry pattern. The large chart pattern is strength and momentum. You're going to couple it with the entry pattern, and it begins with a reversal bar on the small chart. So everything is flying down, and you're going to wait for the small chart to go up, and it's totally counterintuitive, which is why I encourage you to go study this a couple times and build some trust. This reversal bar signals the beginning of the pullback, the beginning of the retracement. That's the fight from the small crowd starting. You'll be able to pinpoint where that pullback is most likely to go, from the bottom of the large triggers to the top of the large triggers. Your entry chart has large triggers and it has synthetic triggers. The synthetic triggers are nothing more than the large triggers from the large chart. So if price returns to large triggers, we want the large triggers from both charts on our entry charts. That's where the market's most likely to retrace. It's not your entry though, because triggers aren't bouncy. You need areas inside of triggers. Inside is the most important word I could ever give you here. Areas inside of triggers. Fibs, midbands, or yellow one-to-ones. This is what's most likely to create the bounce, the ricochet, and the continuation down. I like to think of price as a tennis ball. I like to think of the lowest area inside of those triggers as the brick wall. And that's exactly what I'm looking for to create the bounce down. So my limit order goes 2 ticks below that brick wall, 2 ticks below that lowest point of resistance, guys. And this becomes your entry for the highest probability trend trade. You have defined where the market is most likely to continue. Any line beyond the retracement zone, you see the top of the triggers right here? Once you get north of those triggers in a short trade, the advantage of rule number 3 is no longer in play. Once you get above the retracement zone, once you get above the areas inside of triggers, you don't know if, you don't know when, you don't know where that market may go down. We call this the wrong side of the triggers. That's what I call it. I hope you'll call it that too. Trades don't come from the wrong side of the triggers because your advantage is gone from the wrong side of the triggers. In an uptrend, you're going to get to the point to where you start calling your entries about right here. You're going to be able to look over and see your triggers, your areas, but brand new users, you're going to wait for that reversal bar. That reversal bar is a slowdown in the move. That reversal bar signifies the beginning of the pullback. And once you get the reversal bar, you'll know where that retracement is most likely to go using large and synthetic. Somewhere inside of those triggers is where the retracement is most likely to go. If I have a fib, a midband, or a yellow one-to-one, any combination, those are the areas that could create a bounce. So I call this one the window, guys. This is your window of opportunity. I know that price may retrace to the bottom of the triggers, but I know that price is most likely to bounce from an area inside of triggers. So this blue shaded area shows me that I do in fact have 2 different options. Because of the strength on the large chart, because of the clear path on the large chart, hopefully you'll choose to put a limit order 2 ticks above the highest point of support, closest to the reversal bar. This is keeping you from hoping it pushes lower and missing the move, guys. It's okay. If it runs to the bottom area and you're in at the top, you're good. You know where the market shouldn't go. It shouldn't go below these trigger lines. It shouldn't get beyond there to what we call the wrong side of the market, or the wrong side of the triggers. And guys, you're going to use that concept by defining where the market is most likely to continue, by pinpointing those areas inside of triggers, by accepting that this is where I need to enter to have the highest advantage. Your initial stop is going to be placed beyond those triggers, on the wrong side of the triggers, because this is where the market should not go. If this is going to be a part of your 70 to 80% winners because the rules are met, 20 to 30% of the time they're going to push through that retracement zone. They're going to push through those areas inside, and you're going to be waiting for them, and you're going to say, man, my advantage is gone. I no longer want to be in this trade. 20 to 30% of the time, they're going to hit your stop. 2 to 3 times out of every 10, 20 to 30 out of every 100, guys. Trading isn't about 100% wins. Trading is about trading a pattern that you can prove wins more than it loses. And when it loses, those are acceptable losses. Those are calculated losses. Those are rules-based, advantage-laden losses. It's the losses that occur when you break the rules, when you trade into areas, when you try to get in from the wrong side of the triggers. Those are avoidable losses, guys. There's no reason to take them other than you wanted to be in the market without an edge because you'd rather be busy than correct. Trust me, I know this one. So you've got to be able to piece it together, to give yourself this advantage. And what you're doing with the high probability trend trade is you're learning how to identify a market where the odds are favorable for it to go up. It has a stronger chance of going up than it does going down. And it has nothing in the way to stop that forward progress. And when your large chart has rules met, it's trading all the way up here at 97.05. And a lot of you are going to say to yourself, man, I've only got $80 worth of profit potential. I'm almost to a termination condition. That's not enough money. I can't take this trade. Guys, I have to remind you that you're not taking the trade from the top of that bar. You're pinpointing where that tail is most likely to form. It doesn't even exist yet. And if you get in at the reversal bar and you let it pull back to the best area, that $80 magically turns into about $320 worth of profit. And this is why using a refinement chart, when these advantages are in play, that's what creates it. And you'll see on the large chart, the momentum never wavers. The path remains clear. On the small chart, some of you are going to say, but Mark, there's a 1-to-1. But there's no termination conditions here. But Mark, the colors don't match on my triggers. But momentum is defined here, guys. This is just a refinement chart. All it is a way to get into the market with the highest chance of success with the least amount of risk. If you jump in at the top and you're not patient, where the market shouldn't go doesn't change. That's a lot of risk. But what you've also done is you've shortened the distance to your target. So you've increased risk and you've reduced profit potential. If you're not patient, waiting for the best of the best entry, and guys, this is going to happen on a small chart, they're going to head fake you. They're going to act like they're going up before your entry. And if you jump in up here, all you've done is increase risk. All you've done is shorten the distance to your target. Great entries create manageable trades, guys. Great entries reduce risk. Great entries increase profit potential. So this slide shows you what the pattern with the 3 rules being met at the same time looks like. You can use these tails to study, and that's what we're going to do right now. We're going to scroll back on a large chart, and we're going to look at this tail right here with momentum. And this is what we call a 50-50 trade, guys, when the small triggers are through, but the large triggers aren't, and we'll talk about that. But let's see what that pullback at 954 looked like. 2 ticks above support inside of the retracement zone. Is that the one you were talking about, Morgan? And if I take that tail, or I take that circle, and I bring it back to this tail, what's it look like? It's a pullback to resistance inside of triggers, guys. 3 divergences printed. You might have exited the trade, but the entry pattern is 100% true. And if we back it up, we'll look for another. This one's probably not going to have it. Look how price returned to those large triggers. And if you look at it on a small chart, 3 divergences probably kept you out of the trade. But it didn't get below those triggers, did it? These patterns repeat themselves, guys. They repeat themselves every day, every market, all the time. You're just learning the patterns. And there's a way to get there the fastest. This is Chart Reading 101. And before I tell you, hey, get some work done, I want you to see something. These are my pictures. I'm at 3483 for the year, 3,483 for the year. Today is the 29th. And my pictures started right here. I'm up to 27 pictures today already. 27 pictures of entries, of management, of exits, of things that I see, of lessons that I'm learning, guys. Pictures create that correlation. You know exactly what you're looking for. When you take the time to annotate them, when you talk about why the triggers are strong, why it's a termination, why this was your best entry, you create a correlation between what you see and what your brain thinks, guys. So the fastest way to get to where you want to be, I firmly believe this, is go take pictures of strong triggers. Take 25 pictures of strong triggers, take 25 pictures of weak triggers, and get those pictures into your spreadsheet. Whoops. Take them, define them, point out, talk about exactly why they're strong. Smalls below large, colors match, scissors open, strong, odds favorable, momentum. If you do this for each of those concepts, strong triggers, weak triggers, clear path, termination, what you're doing is you're committing to that look. You're insisting on that look. You know exactly what it means to have that edge. In order to make this an easier endeavor, created the high probability trend trade checklist, guys. This is the 100% best of the best way you could ever take this trade. This is the highest chance of success you could ever have with a high probability trend trade. And it says, is the market coming from a strong top or bottom? And this is a pretty key concept. It's not mandatory for a high probability trend trade, but a strong top or bottom means that not only did you have a termination condition at resistance, the buyers couldn't push through it, but it means that the sellers took over, told the buyers to go to heck, and they reverse the market. Those large triggers go from green to red. And when your rules are met after a strong top, that's the highest probability trend trade you could ever take. Price reaches Fibonacci support. The sellers had been in control for a long time. When they got to support, maybe they took all their profits. Maybe the buyers just took over, but the market reverses. This strong bottom is a precursor to the highest probability trend trade you could ever take. And while it's not mandatory to take a trend trade after a strong top or bottom, strong top or bottom is rule number one for the second trade on your plan. It's rule number one for almost every trade that Nexgen teaches beyond the high probability trend trade. So if you can answer yes, that's a little more pep in your step. The checklist asks if you have momentum. If you do, fantastic, go to the next rule. If you don't, it's okay to sit on your hands. There's the difference. So when you're taking pictures, make sure you're taking the right pictures. And then it asks about termination conditions. And this picture, I saved this for this part because this shows not only the best for the new users, price reaches support, the triggers are above, wait for the reaction, wait and see what the market does. Guys, every line you hit is going to be a termination condition, at least for a moment. Wait for the small and large to either get below that area or wait for the market to reverse. One of the two are going to happen. There's a transition phase as an area is breaking, as you're getting that breakout. We call this a 50-50 look. And we call it a 50-50 look because 50% of your triggers, the small, the faster, they get below that area of support, but the large triggers are still above, which means that my path isn't clear yet. But as long as I have momentum, as long as I have strong triggers, that area has the potential to break. It's just potential though, it's not a clear path, which means that you have to manage a little more assertively. I'm going to give you a plan how to take the best shot at this look, and it's a part of the plan that I'm going to give you in just a moment. And then you have to define your entry all the way down to where your entry goes. So guys, this checklist, and the second page you can just print it out. This checklist has been used by a lot of people. This checklist has been proven through rigorous testing to typically win 70 to 80% of the time. Nobody in the history of answering yes to all of these truthfully has been able to show me where they've done worse than 70%. I would encourage you, prove me wrong. I would encourage you to take the time to prove that I'm full of beans and make a declaration from the highest mountain. Because if you learn these rules and you just learn them out of spite to tell me that I'm wrong, that I'm a snake oil salesman, you're going to be with me for the duration, guys. The people that take the time to study this very basic trade rarely go away. So what I've done is, as you learn to read your indicators, I'm going to hand you a plan. This is the KISS plan. This is the Keep It Simple Sunshine plan. The keep it simple stupid. If HR is not working, And then Bob, you know what it means for you, Army guy. So this is a stepping stone. And I like that word. This is a stepping stone. This is a quick hop to the next trades, guys. This is not your get rich trade. This is the one that teaches you to find your get rich trade. This is the one that teaches you to read your indicators. This is the one that teaches you trust in momentum and terminations. And guys, it's designed to optimize your chances of success. I like that, Bob. With this trade, that's what the plan's designed to do, to optimize your chances of success, because confidence comes through the memory of that success. Through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That was my brother playing with AI a couple months ago. Guys, when you can read your indicators, when you can open up a chart and say to yourself out loud and confidently, I have momentum, my path is clear, this entry area is going to change dramatically. It's not always going to be a pullback to areas inside of favorable large triggers. Sometimes it's going to be just jumping in. Sometimes it's going to be a quick snap back to a fib. Sometimes it's going to be going counter trend because you're like, oh my gosh, this is the termination and these triggers are rolling and I can't wait to go long. And you're going to create your own plan, but it's going to be based on your ability to read the indicators. So focus on indicator reading first. There's two things you have to know before you jump off that simulator and go live, guys. And I'm telling you, embrace the simulator. The simulator is not a shameful place. The simulator is the world's greatest classroom because there's no ill effects from mistakes. You have to know why you're going to enter a trade. Enter a trade because the rules are met. Because your rules are just describing a pattern. That's it. Your rules are nothing more than looking at the charts. Whoops, I'm trying to find a picture. That was not a good transition. Looking at a chart and saying to yourself, this is my pattern. This pattern has been proven. I've tested it. I've verified it. I'm trusting it. I'm never going to miss that great entry because I know that it wins more than it loses. But because I did the study, because I verified, because I've validated, because I've back tested, because I trust it, I know that I will occasionally take a loser. And guys, when you accept that you're going to lose and that it's not always a negative, that's what removes the emotions of trading. When you can focus on the execution of your method more than the result of the trade, that removes emotion a lot. And then you have to know why you're going to exit. This is where I fell short, guys. When I learned entries, I was good at entries. I could follow a plan, I could take an entry, I could put my stop in the right spot, and then I would jump out 2 ticks deep because I was scared to death that they were going to come and take my money. And I would take, true story, guys, after I blew out my first account because I didn't have a trading plan, I would take trades, I would take beautiful entries, and I would get out with a tick or two profit because I couldn't sit through the fluctuations. I couldn't trust those large chart advantages. And at the end of the day, I would take 20, 25 trades and I would be down $200 in commissions. That's it. It was commissions that were creating my negative equity. So exits are taken either at profit targets or when the advantages that had you enter the trade have gone away. So if you look at your chart and you say, I have momentum, I have a clear path, I have an entry area, when these advantages go away, specifically momentum and path, you can say, I don't want to be in this trade anymore. I no longer have an edge. So if you're in at the area inside of triggers, guys, and it goes 4 or 5 ticks beyond those triggers, you choose to exit. And it doesn't feel like a failure. It feels like great management. So define your entries. Great entries create manageable trades. Great entries reduce risk. Great entries define the advantages that get you in so that you can define the disadvantages that take you out. And that takes you to management. Your entry is very mechanical as a brand new user. Your entry is very if-then. If I have strong triggers, then I look for no termination conditions. If I have no termination conditions, then I go to a smaller chart and look for an area inside of favorable large triggers. Your management plan here is going to be the exact same concept. It's very if-then, and it's designed to have you trading 2 contracts. The first contract is going to get you paid. And I'm telling you right now, the first contract is going to teach you to accept that it's all right to exit a trade at $100. And then the second contract is designed to build trust in the large chart, to believe that when you have momentum and path, it's more likely to go up or down and not reverse on you. So the KISS management plan is going to help you understand stop placement, and it's going to get you focused on being paid. And then you probably are going to craft a plan tailored to your personal goals based on your experience reading the indicators. But the KISS plan, this very if-then, emotionless, and what I'm about to talk about is right here in the spreadsheet. Did I drop the spreadsheet in for you guys? Let me do it right now. And the KISS plan is 100% dependent on your ability to enter the market where the market is most likely to continue. So your grade entry creates the manageable trade. So if I enter 2 ticks below resistance inside of triggers, well, then my initial stop is 4 to 5 ticks beyond the triggers. Guys, this is where the market should not go. And you can say that with confidence. If this is going to be one of those winners, they should not go up here to 71.49. My entry is 34. My stop is 49. I have $150 per contract of risk on this trade. Guys, I accept that risk. I accept that risk because this is a pattern that typically wins more than it loses. If you don't accept the risk, it's okay to not take the trade. But if you try to shortcut it and put your stop maybe just above the mid band, it's likely to get hit. You watch the market drop. If you put it in the retracement zone, it's likely to get hit and you watch the market drop. So if you're not comfortable with the risk, it's okay to not take the trade. Targets are predefined. $100, get paid. $200. If they don't stop you out, you're going to get a reversal bar in the direction of the trade. And when you get this, you're going to redefine where the market should not go. Your new stop will be 2 ticks above that reversal bar, guys. When the rules are met and you get a reversal bar from the area inside of triggers, we call this a confirmation because it is confirming that now the market is going down with momentum, down with a clear path, and down from the area where it was most likely going to go down from. This confirmation bar is because the rules are met. And because the rules are met, you can reduce risk. They're doing everything we hoped it would do. If you get a reversal bar from the middle of nowhere, guys, that's not a confirmation bar. It's just a reversal bar. Confirmation bars come from the rules being met. That's what allows you to reduce your risk. And you're in the trade. And now you've got $30 of risk per contract. And you're either going to get stopped out for a tiny little loss, or it's going to go to your first target. And man, the first target is magical because it's target hit. And once you hit that target, one contract comes off, one contract remains on, but $100 goes into your account and it's safe. It's behind a locked door, and you're going to move your stop to break even. You're going to say, I just got paid. I have absolutely nothing to lose. Let me learn how to trust that large chart. Let me learn to believe that when my large chart has odds favorable momentum, that when my large chart has absolutely nothing in the way, that market is more likely to go down to key Fibonacci areas than it is to just arbitrarily reverse from the middle of nowhere. So after $100 and no risk, if it hits that second contract, guys, that's $300. $300 for 2 to 3 minutes of active work. You had to sit on your butt maybe for 30, 40 minutes waiting for it to set up. But once it set up, it was perfect. And that's $300, guys. That's $300 in a couple minutes of your life. If that's the best you did every day, I love sharing this sheet because our goal is to get paid, guys. If the best you do every day for a trading year is $300 a day, it's a $75,000 year. I would say most people in this room aren't making $75,000 a year through their trading yet. It's okay. You're going to be doing this for the rest of your life, guys. Learn how to get paid consistently. And your account doesn't know if the $500 in there is from one trade or from 5 trades, 5 $100 trades. It has no idea. The goal is to end positive every day, guys. And very often, new users, experienced users, all users, they're chasing that professional trader result when they've got new trader abilities. And it's okay to hit your goals, to stop, to go back to sim. Cav in this room is one of the best. He typically posts around 7:30, 8 a.m. Eastern. goals, goals met, going to simulator. And he'll just shut it down. I hit my goals. I know what I need to make. I'm going to go to simulator and just keep practicing so I can become a better trader. It's okay to do that. Sorry, my throat dried out. So this is going to be, and one of the things I say is I'm going to give you everything you need to be successful. Here it is right now in a zip file in the chat box. Guys, you can take this file, you can hover over it, you can download it. If you download it, it'll go straight to your download section. It'll tell you that it's potentially dangerous, but I really feel like I'm pretty trustworthy. There's the spreadsheet. Or you can just grab it and drag it over and put it onto your desktop. Inside of that zip file, the everything you need, all you need, guys, is chart reading 101 so that you can get good at recognizing the first two advantages. It's the high probability trend trade checklist. Get in the habit of writing these rules on every trade that you take, whether they're true or not. Because if you go through it like this, and I think we had a good example with Jared, right? If you go through and you address those rules on every trade that you take, did I have strong triggers? Was there a clear path? Guys, you're going to learn how to police yourself. You're going to learn how to say, man, this was the perfect trade. It just didn't work. Inside of that zip file is the KISS plan, the highest probability trend trade you could ever take in a very pragmatic way to manage it. And then also that 50-50 trade where one area is not broken. And look at that. You have to know about strong tops or bottoms to have the highest chance of success with this trade. You have to realize that divergence is a loss of momentum, and it takes momentum to break areas if you want to have the success for this trade. You learn all of that in the high probability trend trade. Inside of that file is also, this is the pictures you can take. Guys, I take pictures like it's going out of style. I encourage you to do the same because I'm telling you, the more pictures you take and annotate, the clearer everything becomes. So take them before you enter. Take them during the trade to work on management. Take them after the trade. Write those 3 rules. And then take the no trade pictures. Remind yourself that it's better to not be in a trade than to be in the wrong trade. 3 and 4, the one from complete trade to finish with your annotations, I want to see those in the room. I want to give you feedback on how you're reading your indicators. I also want to see your no trades because sometimes as brand new users, we talk ourselves out of the perfect trade, even though we should have been in the perfect trade. And we'll be able to identify that if you do it. You're also going to get in there, I want to say you will have the PowerPoint that I use to teach every day. So you'll have access to all of those pictures. And then finally, inside of there, guys, and this is what I wrote because my brother said, Mark, I want to document. I want to be able to put on the website something that if Ronnie B shows up and he wants to use the software and he wants to take advantage of these Fibonacci levels and he wants to understand advantages, how can he do that without ever sitting in your class? Well, this goes through everything that we just talked about in the first hour. It talks about how I teach in the room, why I teach in the room, the 3 advantages that you're going to learn, that momentum and path, once you understand that, it's the golden goose, guys. It reminds you of the potential win percentage, that it's only your first trade, the rules that I discuss, the charts that you find them on, the indicators that we use, and then it goes on to describe each individual advantage, exactly how to recognize it, all the way down to the entry sequence, and then how to study, how to go back and circle those tails, guys. And if you need simplicity the way I need simplicity, this is 2 pages. Everything you need to be able to recognize the high probability trend trade, the looks, everything. That's in that file as well. So the first hour, and it's the same hour every freaking day, guys. Every day it's the same. Because repetition creates recognition. So you now have rules for the highest probability trend trade. We've broken them down individually, how to recognize them, what they mean to you, where to find them. You have the ability to simulate, to practice, to post in this room, to ask for help. Every time you're not sure, ask for help. Every time you take a trade, put it in the room. Let's read it together. Let's see what you did. My brother drops in here every now and then, and he always types into this room, the people who post the most win the most. And this has been true for as long as Nexgen has had chat rooms. The people that are willing to put themselves out there, the people that are willing to share losers and winners, the people that will annotate a chart and talk about, hey, Mark, this is what I saw. This is where I saw it. Am I reading my indicators correctly? Because one of the things that happens is you believe you understand momentum, but you're making a mistake because you didn't want to ask for help, or you believe that you know termination conditions, but you made a mistake because you created your own idea of what it means to have it rather than the true idea. I see this a lot. I'm going to share a story because I'm still wound up on caffeine. I had a gentleman once call me on the phone. I had one of the salespeople, one of the client advisors say, hey, Mark, I got a guy that's got to talk to you. Because he says that he's trading your KISS plan and he's at 20% winners and he's getting slaughtered. And I said, have him call me. And man, he was upset. He wasn't in a friendly mood. He said, I'm following your plan, and Mr. Novak, respectfully, you're full of shit. As respectful as that can be. And that's okay, guys. That doesn't bother me. I want you to believe that I am, and I want you to prove that I'm not. He says, I'm following your plan, and I'm losing. And I said, okay, so do me a favor. Todd P, that was not going to work. That's to your C drive. I do that sometimes. I said, let's go through it, and let's look at a couple pictures of the trades that follow the plan that aren't working. And he goes, this is a high probability trend trade. And he was trading directly into a termination condition. And he goes, this is one of those 50-50 trades. And he'd have 2 or 3 divergences. And I said, all right, do me a favor. Let's clear up some misunderstandings. We went through his chart. We redefined the advantages together, exactly how to recognize them, what they look like. And it took about a week of study. We went back in because he was already pretty comfortable. And after a week together of him posting in the room and getting that feedback, I said, so go back and give it 5 days for me. Give it 5 days. Now that you know that this isn't a clear path, but only the potential to break, and let's see how you do. And he went, and I heard from him 7 days later. He traded Monday through Friday. Guys, there's your pattern. He traded Monday through Friday. He had the weekend to go back and study, and he called me on Monday. And I said, how'd you do? And he said, 87% winners, or 88, or whatever it was, 93, I don't even know. He goes, Mark, I thought I understood the rules, but I didn't. He goes, and once you cleared it up for me, and I could truthfully follow the plan, he goes, it worked. And he created little variations as he got better with it. But what happened is he was able to stay focused on the best of the best, and he was finding the success. And he would check in once a week, and he's at 80, and he's at 83, and he's at 79, and he's at 95. And about the 4th week, he quit checking in. And as far as I know, this is how he's feeding his family. This is how he's making his living. But it just took a little feedback to clear up some misunderstandings, guys. So that's what we're going into on the 2nd hour. We're going back to click on every chart that's been posted. We're going to talk about momentum. We're going to talk about path. We're going to talk about entries. I'm not going to shame you or put you down. We're going to celebrate every victory, and we're going to talk about things that could be done better. You got it, Wayne. I'll wait for you to get back, and then we'll take a look at your charts. So take a few minutes. I'm going to take a few minutes as well. I'll be back in 5. And thank you, guys. If you post in the room and you're going to split, let me know. Because it doesn't do me any good to give you feedback if you're not here. Look at that. Price reached Fibonacci support to the tick. If you're brand new and this doesn't make you believe, I don't know what could. To the freaking tick, and look at the reaction, and it's instant. You guys knew about it. You didn't have to hope. I love that. I'll see you in 5 minutes, guys. Go stretch your legs. half of the day. Um, Again, this is so freaking cool. Um, Buy low, sell high. How am I supposed to know where high and low are? Guys, use Fibonacci. And sometimes lows are only lows for a minute. Your rules will tell you when the low is no longer the low. Guys, and right now, we're on our way up. We had a termination. It reversed the market. That makes it a strong bottom. We have odds favorable momentum. Andy. And that has the potential to break. So there's a lot of you saying, come on, market, before you hit that next key area, give me a pullback to an area inside of triggers. And if it does, outstanding. And if it doesn't, it's simply not your money. And that's kind of how it works. So I'm going to scroll up and I'm going to start looking at the posts that you guys provided this morning. And then for a lot of you, you're going to see I post a lot in the morning when I'm doing study. I like to share it with you guys. I'm not going to go through my own pictures. I know what I saw. I don't need the feedback. But if you look at anything that I ever post in the room, feel free to ask about it if you need to. I'll go over everything. I try to annotate everything that I do very clearly when I put it in the room so you know what I'm thinking. But if you need help with it, let me know. And just a reminder, I have to scroll through the chat box, up, down, back to respond, back to go find it. So if I ever miss a picture, if I ever miss a post, if I ever missed a question, do me a favor. Let me know. TradingView does not have fibs, Jared. John's programmers couldn't figure out how to make them effective the way we use it. They have a Fibonacci tool where you could draw your own in. That's how John Novak created Nexgen, is he was working with a gentleman and they were drawing in their own Fibonacci levels. And my brother said, man, I got to automate this. I've got to make this better than it is. One of the things that we use on TradingView, though, Jared, is there's a program called Chart Prime. And what it does is it puts in areas of supply and demand. So if you're using TradingView, the plan that I teach in there uses these key zones as potential turning points, but it is not Fibonacci. But what you'll find is that the lessons that you're getting from this high probability trend trade, the indicators are the same, and the translation I think is pretty easy. Pete, I love this trade. I want to talk about it. Are you in here, Pete? This is for everybody. I want you to see something cool. You're welcome, Jared. So this would be considered a weak bottom. So the smalls get through, drunk fingers, whoops. Smalls get through the area, so it is not strong. And guys, one of the patterns that happens is when, that's just too small, isn't it? Needs to be a little bit bigger. There we go. One of the things that happens is when you have what's considered a bad bottom, very often, yeah, I know, right? The market likes to continue in the direction of the prevailing trend. When we talk about these guys know where these areas are, they know where these areas are. And if these sellers don't get to that key area very often, even though the buyers fight, they continue down. And Pete knows that. So Pete says, all right, I'm not getting suckered into this long without a clear path with those large triggers not following. I'm going to let the buyers fail, and then when everything rolls and agrees, I'm going to find a way to capitalize on it and make a little money down to that trouble spot. But it's kind of cool because he says the market reversed from the middle of nowhere, and it did. But the part that Pete doesn't put on the chart is because it's not a strong bottom, that failure was imminent. The large triggers staying so far away kind of verified it. And he knows that he's not looking for those long opportunities. And the patience that he shows to get the momentum and the potential to break down is outstanding. And this is not a high probability trend trade, guys. What this is more of a medium probability, awesome chart read, because the path isn't clear yet to the down. I really liked this trade, Pete, and I think that it was this weak bottom that sets you up for this reversal from nowhere that puts you in a position to capitalize. And that's chart reading, and that's the kind of stuff that's going to happen once you guys get comfortable speaking in terms of advantages and recognizing a couple patterns. Do you guys remember when I said that price tends to return to the large triggers? God, if the large triggers are ever a full bar away, they typically do. And Pete waited for that snapback and reversal. And then everything is down. There's his first exit. There's his second exit. Everything is down. It has the potential to break. And Pete gets in and says, let's take it down to the next area. And absolutely beautiful. And if you look at this from a path standpoint, you'll notice that he's getting below trouble and trading to trouble. And then he's getting below trouble and trading to trouble. And when he gets to that decision-making point, Pete's just like, hey, next trade's coming. Let me pause for a second. Let's wait and see what the reaction is. Let's see if they change directions. And when they don't, he finds a way to capitalize. Pete, you're killing it this morning. And then same thing. Everything says down and nothing is in the way. And Pete says, let me go down with it. Just awesome. And the cool thing is, guys, and I think this is cool, is that when you start posting in this room, when you start showing me what you're doing, tell me what you're thinking, it takes me about 4 or 5 pictures. It's about 4 or 5 pictures, and I start to recognize your patterns. I start to recognize what you're doing. I start to recognize your plan. And this is the one that I'm gonna, that I will share of my pictures. Pete, did you catch this one? Right around 80. Weak bottom, pulls up, triggers don't follow. Once it gets below, trade from the fib to the fib. I was watching this set up and I was like, man, Pete's in right here. And he probably held a little longer than I did. I got out at the blue fib, but it's like an ATM today. And some days it is, and some days it's not. But that's the exact same read, the exact same look, the exact same entry, and probably a pretty similar exit. Guys, I'm going to learn your plans. And one of the best things you could ever have, I feel, is somebody to help hold you accountable. Somebody to help you stay in your lane, if you will. So Ron did this one. Same concept. Weak bottom. Goes up. Triggers don't follow. Wait for everything to turn and get the momentum and ride the momentum down. And guys, this is the creator of the chili dog. And you're going to see that in this room. So Ronnie, you're going to see it. Jared, you're going to see it. Todd, I think you've embraced it a lot. The idea that once you have momentum and path, once you can identify strong triggers, and you can say to yourself, holy smokes, there's absolutely nothing in my way with all this momentum. Let me just jump the fudge in, drop it down, take it, quick profits. And Ronnie, I know you're new. Today's going to be a little overwhelming to you. Tomorrow will be easier. Third day, you're going to be like rock star. It's just how it works. But feel free to ask questions once you feel like you know what to ask. This is the idea that when you have a market where the odds are favorable for it to continue down and there's absolutely nothing in the way to create a bounce, you're going to find a way to capitalize. You're going to find a way to make money. And it's not coincidence that Pete's entry right here looks exactly like Ron's entry, because momentum and path, guys, once you have it, can't stress it enough. And what you'll find in this room is that these gentlemen with the experience, with the time, with these different plans, they're willing to share. They're willing to share the whys they did what they did. And while you don't need to trade like them because you're not there yet, you'll have some insight as to why they're doing what they're doing. Better Dad, do you like this new horizontal or this new vertical? You like that? Work for you? Everybody's different, man. Yeah, I can't stand it, but that's just me. Because you can't see them side by side, right? You got to split your patterns and go like this. I like being able to look at it and glance, not have to scroll, but that's just me. So what do we have? We have weak top, strong triggers, and let's talk about your clear path. I like that you try new stuff. In order to have a clear path, your large triggers have to be below this fib. Excuse me. So what you have here, Better Dad, is one of those 50-50 looks. Your small triggers have cleared it. But when you guys talk about triggers clearing a fib, I want you to think of a car trying to go through a brick wall. There is the front of the car that has cleared the brick wall. There's the back of the car that hasn't made it through yet. You haven't made it through that wall yet. So this is one of those 50-50 looks. Does that make sense? Everybody in the room? Just because one line is through, it's not quite there. You need both of those lines to get through a fib. So we're working in a medium probability scenario because the path isn't quite clear. You didn't have divergence. Your entry was perfect. You make $100 and you go break. Fib prints on bar close. Oh, good question. Was that one of the synthetics? It sure was. Okay. So let me share something with you. And you know what? I think it was either Cav or Pete that pointed this out and created this lesson. Let me go to this one. That guys, the area is not clear. Oh man, I have to save this image. I'm gonna put that into my spreadsheet or into my PowerPoint, Morgan. That's awesome. Let me share this picture with you guys. So when you're looking at your large chart, Better Dad, actually let me find you the picture before this picture. There's Fibonacci areas that come from 3 separate time frames, and there's different ways that the software works. So anything that is native to the chart, any Fibonacci area native to the chart will extend all the way off the screen to right, guys. So on this 13.2 chart, this is my 13.2 fib. You're also going to see 21.3 fibs, and you're going to see 5.1 fibs. So you've got 3 time frames worth of Fibonacci on your large chart. But here's the kicker, and Better Dad, this was funny, and I love that you did this because it's a lesson that I should cover a little more. Any area that is synthetic, that is from a higher time frame or a lower time frame, it won't print until the bar closes. And you recognize that, and that's pretty cool that you did because it took me 3 years. The same is true with one-to-ones. The same is true with the midband. The only thing that'll extend underneath the most current bar is divergence that's still active and the native fibs. So Better Dad, I had a gentleman in the room that, let me go back to your large chart, sorry. He kept saying, man, it's gone. And he felt like he was shooting gaps, like he would trade into, he would take the bar into like one-to-ones and go, but man, there was a gap there, and it took us a little bit. I was like, dude, you keep trading into termination conditions. Can you guys see my video? Sometimes you got to stick it to the man. Just making sure. So it was kind of cool, Better Dad, and it was a great lesson. Because this is one of those synthetic fibs, you're not going to see it on the most current bar. Does that make sense? I'm glad that you did this. I'm glad that you pointed that out because this is a lesson that I revisit maybe once every couple of months. And you see it down here too. And what would happen is people would take shorts going, but look, I've got a gap, I've got a gap. And you really don't. Guys, the launch is official. I love it. I'm sure you have plenty to do. I'm sure you're going to have a list for me when class is over. Your entry is perfect, Better Dad. First profits taken, amazing. Out break even. Just beating the market up $100 at a time. I love everything about this trade, and I appreciate that you posted it because it created the opportunity for a lesson there for everybody. All right, now we're going You say weak bottom. Better Dad? Okay, so Jared, anytime we say synthetic here in Nexgen, um, let me pull the picture back up just so we can do it. Anytime we say synthetic, we mean from a different time frame. Um, so when we talk about synthetic Fibonacci areas, this is a 13.2 chart. Synthetic would mean that this 21 from a different time frame was superimposed onto your large chart. Same thing with the 5-1. And when we talk about entries, Jarrett, man, I love these questions. I love these questions. We talk about the synthetic triggers on the entry chart, and the synthetic triggers, the ones with steps, those are your large chart, large triggers. So anytime you hear synthetic in the Nexgen realm, it means that it came from a different time frame, but it was put onto that chart because it creates an advantage for you. Good question. Thank you for that. All right, smalls through, not large. So check this out, Better Dad, before we ever get to your entry. Price reaches Fibonacci support right here. The divergence low right here. All your triggers are up here. That is a perfect no triggers through termination. And then when it reverses that market, guess what? Strong top, population U. You're looking at the fib above, not the second fib that it hit. It made it to the edge. Pretty cool. So you had a strong bottom, you had strong triggers, you had no termination conditions. Let's see what you did with it. You entered at the area inside of favorable large triggers, and you made money all the way up. And then when it comes back, it's still rules met. You catch it on the second one, they came back for you, and you make money up. And man, this is awesome. This is awesome. John, we're not to those trades yet, but yeah, you're absolutely right. So guys, check this out. In, paid, out, rules met again, in, paid, out. Beautiful. Go do things and stuff. I'll see you at noon. Better Dad, great trading. And let me show you guys something too. This is what happens when you start getting good at this stuff. So Better Dad made money from here to here, inside of this range. Better Dad made money from here to here. This is my favorite part. He double dipped. His rules were still met. He got in, he got paid, he got out, and he found the next trade. He double dipped right here. That's like double the money. All in the same area, guys. And that's a chart reading thing. And expert dad, better dad. I'm calling you expert dad. Expert chart reading. Great understanding of advantages and freaking amazing to catch it twice and make that money. Great job. Awesome, awesome trading though. Celebrate victories, guys. It's important. When you do things well, high five yourself. Get in there. It's so easy to beat ourselves up. It's so hard to celebrate the victories that we had. And man, you've got victories on that one all over the place. Strong top, odds favorable, not a clear path. You just jump in. Felt mechanical. I like that. Little to no emotion. That's trust, Better Dad. That's trusting the rules, trusting the reads. And more than anything, saying to yourself, I know this could lose, but it's more likely to win. That's what takes the emotion out of it. I know this could lose, but it's more likely to win. Pete jumps in, right? Pete tries to do that breakout momentum thing, and it doesn't work. But check it out. It pulls right back to resistance inside of triggers, and he holds. He says, this is my look. I'm going to hold it, and he still finds a way to get paid. Really nicely done on that one, Pete. Momentum, potential to break. Let it get below the decision-making area, and the odds of success go up. Awesome. You guys are making me proud this morning. We got some traders in here. And you guys know what's cool, Jared and Ronnie and you guys that are new, is Pete and Better Dad, they're not sitting in the same room. Pete and Better Dad are in different sides of the country, right? And some people are even in different countries. And they're all taking the same trades from the same spots with the same advantages, and that's pretty awesome. Trust the big chart. Momentum and path, odds favorable, clear path. And Pete, here's your mistake, right? Even the cool kids make mistakes. And now we're going to shame them and ridicule them and beat them up 32 ways to Sunday. Not really. What we're going to say is, Pete, if you had only waited for the pullback to the area inside of triggers, because you can't jump into a momentum trade if you don't have momentum, they came back for you. They gave you the perfect entry. Life was amazing, and then it went down. And guys, by understanding rule number 3, that entries come from the pullback to areas inside of triggers rather than just jumping in on the way up, it reduces risk. It maximizes profit potential. So Pete understands his rules well enough to know that if it retraces, he knows right where it's likely to go, right where it's likely to bounce, and exactly where his stop needs to be, and he holds these trades. Brand new users, you can avoid some of that heartache. Sun's out, beach calling, have fun, man. Have a great afternoon. So much for that rain holding you hostage. Always a pleasure having you. Great trading, Pete. Yeah. Great trading. Let's see who's next. Bump, 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 bump. I find sound effects make everything better when you scroll. Bump, 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 bump. Oh, it's Pete again. It's Pete again. Oh my gosh. How many times can you post in a room and get feedback and keep finding success? Strong trending market, 30 bars in the same direction. And Pete, you're looking, you tried on the confirmation bar, but it ran away again, just wasn't meant to be in this trade. It happens. Jen caught that one for me. I like it. 70 if you're Wayne. Yeah, 77 is the record, Better Dad. Were you here for that? 77 posts in this room. 77 pictures of annotated charts asking for feedback. And you guys want to know how many charts he got feedback on that day? I'm embarrassed to say it. 77. You're darn right, Better Dad. Pete, sometimes it's just not your money. Guys, post them. Post them if you got them. If you take the time to annotate, I'll take the time to give feedback on everything you do. Cindy says, my husband's a little shy. He's going to post via me. So let's talk about it. So what we have here is that strong trending market, guys. 30 bars in the same direction, piggyback, everything says up. We have a clear path. All the triggers are above resistance. It's already become support. The one thing that we don't have is an area inside of triggers. So I'd like you guys to give me a why if you would. Do you see how the entry came from the wrong side of the triggers? The entry wasn't inside of the retracement zone. The area wasn't inside of the retracement zone. Guys, this is where you don't know. Is the market going to go to this fib and bounce, to the mid-band and bounce? Is it going to go to the one-to-ones and bounce? Hell, is it going to come all the way down to the mid-band here and bounce? I don't know. Guys, I don't have any idea. I've lost my entry advantage. So when you get here, how do you know where to put your stop? You're already entering 4 to 5 ticks below the triggers. This is one of those times where I'll say my large chart looks good, but my entry chart isn't giving me what I need. Waiting for that reversal bar. Waiting for that reversal bar helps. It really does. Was this a strong trending market? It was. It was a strong trending market. Trade the mid-band until it stops working. Guess what? It stopped working. But guys, even the mid-band is outside of the entry area. I like to force it up. I like to make the market go up. Once I'm on the wrong side of things, once I no longer have that advantage, I want confirmation. And if you look at the entry, there's those fast triggers against you. And guys, that's a tough one. It's a good looking entry. That's probably the right spot. HVA, all up. It just doesn't work. But if you want to avoid that instant run over, especially with those small triggers down fast, guys, this is NASDAQ. You don't have a fighting chance against these triggers, but if you enter on the close on the other side, you at least have the ability to not be fighting the immediate momentum. Guys, this is a NASDAQ trade. NASDAQ's a different animal, but rule number 3 still pays dividends on keeping you out of entering the market on the wrong side of the triggers. And this was the easy one down here with momentum and path, right to the pullback. And if you make all of this money, you're not so hard pressed to take the ones that don't have the best of the best. It is a good look, Cindy, but from the wrong side of the triggers, you just never know, especially on the NASDAQ. Jen says, smalls inside the large, not odds favorable momentum, don't have room to the target. No areas inside of favorable large triggers, has no odds favorable, waited for a pullback to reduce risk, entered on the reversal bar. No, you entered halfway down, 2 off at the divergence in here. Jen, are you with me in here? Oh, do have room, sorry. So much for that English lit degree, huh? Strong trending market, right, Jen? 30 bars in the same direction, 3 or more areas. So guys, anytime you have strong trending market, you can assume momentum is on your side. This is the only time where I'll make an assumption that things are there. When you have 30 bars in the same direction without a reversal bar, when you've broken 3 or more areas, guys, this is the large crowd telling you that they are hell-bent on pushing that market down, and it's going to take an act to reverse it. Jen says, I know it's not the strongest triggers here. So what I'm going to do is I'm going to let the buyers fight. I'm going to let the buyers push up. I know the buyers can do this. This is what happens. There's fluctuations. And they do. They push up. And then as they begin to fail their fight, Jen jumps in. She goes, all right, they tried. They failed. Let's go with the large crowd. And Jen, this is just a beautiful trade. It's a beautiful trade. And while you don't have odds favorable, you do have strong trending market on your side. But this is one of those patterns, guys. And I'm gonna do my little let me pretend I know what they're thinking thing. The sellers are full tilt boogie, guys, in control, and the path is clear. That's what the large chart says. So here, 5 dudes said, I want to fight. And right here, it was the collective ass kicking. And she gets in and continues with everything that the large crowd wants. And these 3 up bars, that's the fight. The fight fails. And when the fight fails, Jen says, I can do everything these guys want. I love this trade. Great job, Jen. Momentum and path, momentum and path. Let's see. Morgan. Odds favorable, potential to break, strong bottom, no divergence, perfect entry. Guys, this is rock star potential to break. I'm sorry it didn't get you, Morgan. Sometimes it's just not your money. But that sure is a good look. And you still took the time to take a picture. You still took the time to annotate. And if you're in front of the market, it's going to be that much easier to take. All right. Missed your entry here. That's okay. Sometimes you miss them, right, Todd? Or nosebleed? Nosebleed and Todd, you're not the same person, are you? Maybe you are. Let's just answer the questions. No? Okay. Missed the entry here. That's okay. So I hate that word missed. So nosebleed, why did you miss it? There's a couple reasons. If you're not there, that's just not my money. If you overthought it, Well, then you've got to go through and maybe none of those are overthought. If you overthought it, if you talked yourself out of the entry, go through why you did it. What was it about this chart that made you not want to take that entry? Because then we can work on why you should have taken it. Um, and that's just learning and trusting the rules. And then the other reason you might do it, and this is for everybody, didn't know it was an entry. And that is where we go back and we talk about rules again. So it's okay. If you weren't there, it's just not your money. And then everything is cruising down, right? And you said, would shorting here be trading into a termination condition with the fib support line directly underneath sit on your hands moment? And that's 100% perfect chart read. And why? And let's do it like this. Price reached support, triggers still above, it's a term. And if you learn the definition, guys, if you learn the words that have to fall out of your face to make it a termination condition, what happens is you always answer your own question. And you did. You answered your own question. You just wanted confirmation. The fact that you sat on your hands when price reached support, instead of jumping into the market, hoping it did what you wanted it to do. And guys, when do people break rules? People break rules when they feel like they missed a trade. People break rules when they didn't get paid on the move down. People break rules when they feel like the market owes them something. So the fact that you stuck to your rules, even though you didn't catch this trade, that's a victory, guys. That's a huge win. That's discipline. That's trust. That's understanding. And Nosebleed, awesome, dude. Nice to see you posted. I hope you got that. Pete, strong trending market. You waited for the path to clear. You enter beneath the fib, and you get out before it has a chance to blink. How many of these? How many of these can you take? Let it break, find a way, let it break, find a way, let it break, find a way, let it break, find a way. Whoops. Don't have to trade into it, don't have to trade into it, don't have to trade into it, don't have to trade into it. And if it gets there, don't have to trade into it. Guys, this is one of the greatest lessons you can ever get. When there's nothing in your way, areas are bouncy. When you trade into them, things can bounce. Let them break. They almost always, guys, when it breaks, you'll find a way, right? If it holds, then you're going to be thankful for your rules. Pete, you get the microphone tomorrow. Pete gets the microphone tomorrow. That's all right. Dollars to donuts. Pete's going to trade into a termination condition at least once today. But there it is. Momentum and path, what a concept. Once again, you guys are watching this guy find success with this concept right here. With those core things, guys. Repeat. Days like this restore your faith if you've had a bad day. Days like this, because Pete said it's like an ATM today. I agree. Todd, everything says up, and you jump in, and it looks like it didn't work out. Everything's up, and you jump in, and when momentum is gone, you exit the trade. So the only thing, Todd, are you with me in here? Breaker 19. Not a clear path. Do you see it? So Todd, when you take these trades with momentum and you just jump in on the other side, you're relying on momentum to keep going and you're hoping that it breaks this area. So it's not a clear path yet. And your management's beautiful. You exited, stopped out, magenta, printed after the stop. Yeah, your exit's perfect. Look at where your arrow is. It's still not a clear path. Is that what you're pointing to? You have two arrows. Small triggers are above the fib. Large triggers haven't broken. Do you see that Fibonacci area right there? It's not broken. It has the potential to break because of momentum. The car's not through. Boom, we go back to it. The car's not through. I hope that sticks. I love that. But it's still a great trade. You took it awesome. And what you did is Todd, you said with all of this momentum, with that potential to break, I'm going to try to ride that momentum. And you did it expertly. You let it get above the fib. It just didn't work. That's it. And you gave up a couple ticks on it. I would give up a couple ticks on this all day long. It's a beautiful look. And you did the same thing right here. It had the potential to break, and it doesn't look like it quite broke. So what you're seeing is a market that they're trying to push up. They're trying to create that bottom and go, and they're fighting. The sellers have been there 1, 2, 3 times, and they're fighting. And you just got caught in the fight, but you did it perfect. They can't all win. That's the bummer. That's the bummer. They can't all win. Here you never even got price above, never got momentum. Pretty good reason not to take it there, right? And now we're at mid bands and fibs and the large sugar. Channeling Frugasol. You want it now? Do you want an Oompa Loompa, Todd? My wife and I have a notes section that we share on our phones for grocery lists. And she had like 6 different things on there. So I put Oompa Loompa on the list. I was channeling my Veruca salt too. No, from Charlie and the Chocolate Factory. And then guys, here's a good example. And I don't know if you caught this one or not, if anyone caught this one, but right about here, if you took that same style trade, so this is just a good lesson right now. There it is, Todd. Momentum, you get above the area, and look what happens. So let's mark this up because this is a pretty popular trade for you guys. Whoops, wrong. I need both of them. If you jump in with momentum, right, just arbitrarily jump into the market because of this look here, more power to you. Beautiful. The market goes up. It's great. Guys, when it closes on the wrong side of the triggers, that's your exit. And Todd, you did it expertly, 100%. Beautiful. Momentum went away. Momentum was the reason for the trade. Loss of momentum was the reason for the exit. But I want you to see something. When one of these great potential to break trades and the momentum isn't there, oh, I remember them. I love Veruca Salt. It's either. That failed momentum trade turned into a trend trade. Do you guys see that? If you just do the jump in and it fails, with all of those advantages, guys, it just turns into a trend trade to take you to the next area. And this is one of the things, that Pete does really well, is if he takes this trade and all the rules still set him up for a trend trade, he'll hold through the drawdown. You don't have to. But that's one of the things that he chooses to do in his management plan, because when the large chart is perfect and the momentum trade fails very often, it just turns into a trend trade. Good stuff. All right, Cav, finally, we get to see you today. Oh my gosh, odds favorable, nothing in the way, pull back to support inside of triggers, easy money. And then the first one, 50-50 fails. Divergence, divergence, divergence. A little aggressive here. A little aggressive, but what Cav is doing is Cav's taking a momentum look. When the 50-50 fails, he gets multiple divergences. He's above the areas that aren't breaking, and he takes that little snapback and rides it up, and it's expert. And these are the things that you can pull off on NASDAQ with a little bit of chart reading. And then when the momentum fails, it turns into a trend trade, and he gets paid again. And man, $1,600 is not a bad day. Nicely done, Cav. I like it. And then Pete. Boom, 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 boom. The long downtrend finally comes to an end, as they always do. But 3 hours, it was short after short after short. I added one in there. Pulled $1,900 out of that 150 tick move. That's like 5 minutes in the NASDAQ, but he likes the crude because, like him, it's old and slow. And let's recap Pete's day. He got short here and made money. He did it again here. 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 And I'm not sure that he did it here. He may have. And then, guys, the large chart, when those large sugars roll, says, hey, strong trend is over, reversal bar. And you'll notice that there's multiple divergences and weak triggers. And everything says, all right, strong trend is over. And now he'll wait to see if they decide to push up and change the direction, or if they decide to continue down. And because it's a weak bottom, and because it's hitting fibs, and because those triggers are below the reversal bar marker, let's see if it closed the gap to those triggers. Nope, sure didn't. The sellers took everything they wanted to take out of the market. Pretty cool, right? Weak bottom, 50-50, divergence, pushing through the areas. Man, Pete, I'm glad you had such a great day. Couldn't have happened to a nicer guy. Morgan, everything says up. The potential to break is there. Oh, and there it was. Remember when I said, Morgan, this is exactly what I marked up. When that momentum trade fails, it turned into a beautiful trend trade, and Morgan capitalized. I didn't even look at his picture, but I described exactly what he did. Strong bottom, odds favorable, 50-50, pulls back to support inside of triggers. He catches it on the way up, still not bad. You knew where to put your stop, and just easy money. He's paid at trouble. He's got nothing to lose, and he's holding. Why are you holding for the wrong side of the fib, though? That's my only question. Guys, one of the things about fibs, and let me show this picture. One of the things about fibs, guys, is fibs are an accumulation of thousands of calculations. Oh, right on. Fibs are created from thousands of calculations. These are areas, couple ticks above, couple ticks below. Putting it a tick above a fib, that's almost Murphy's Law to make sure that they stop a tick below and go the other direction. But great trade. And it ended up going, didn't it? You ended up making profits all the way through. And this is the market saying, Morgan, I know you missed the other one, but we love you, buddy. Let's get you back in. Let's get you that money. Great job. Great job. Trina. Bum, bum, bum. Strong top, odds favorable, strong triggers, into a term, entry at the area inside of triggers, and you got paid. Does everyone see that? She brazenly broke rule number 2 with just a total disregard for safety. That's okay. That's Trina's trade. That's not our trade. Let's talk about this. Don't answer this out loud. But if you've ever been in a big bar fight, it's always better to be on the side with the most people, typically the drunken rugby team. So she had a strong top. That means that the decisions were so impactful at resistance that it reversed the market and sent it screaming down. She had odds favorable momentum. She's trading with the trend. The smaller down, the larger down. Every indicator's down here with odds favorable momentum, no divergence, guys. Everything about these charts says that market is more likely to go down than up, with the exception of that damn termination condition. That's how you broke your nose, bar fight? I think I've had mine broken. Maybe not a bar fight, though. Maybe it was. Who knows? So this area right here, when it gets there, Trina has to make a decision. Do I have so many advantages that I'm willing to risk trading into a termination condition? And by the hailstorm of arrows, Trina said, yeah, I'm going to give it a shot. I know exactly where it's most likely to bounce. I know where it shouldn't go. And with this level of momentum, the market's going to be hard to stop. What you guys notice, Trina had odds favorable momentum and no divergence on her entry chart. Trina, that's a big piece of the success here. And then it was just nothing ever said get out. I love this trade. You guys, with a little bit of study, a little bit of practice, all that repetition, you're going to deviate from the original plan. You're going to know through chart reading when you're willing to take a shot outside of it. And Trina, this is 100% the best of the best way you could ever trade into a termination condition. From a strong top, strong triggers both charts, very reasonable risk on the entry. Nicely done. Not a strong top. Odds favorable. Potential, nope. Odds favorable, clear path. There's your entry. And it just didn't work, did it? What's with the 3-day hold? How much hope did you put on that trade, Trina? You gave it all back. It gave you a reversal bar. So let's talk about this pattern. Not a strong top. So guys, one thing when you don't have a strong top, the midband's not a termination condition here, but if they don't just go screaming through the midband, that midband could create trouble, and that's exactly what happened. You took the perfect entry, the perfect spot. They gave you a stop placement. You just didn't believe it. You said, I'm Trina, and dagnabbit, I deserve a win. And you let it change trend, change direction, create momentum, push back down again, and then finally you're like, all right, I give. Trina, you're going to be bald by the time you're 26 doing that. That's a lot of stress, a lot of unneeded stress, right? Perfect entry, 100% abandonment of your management plan. Why? Because of hope. Because I hope it goes down. Because I hope, even though my rules are no longer met, the market goes down. Because I really want it to go down. Because I'm in so deep and so far outside of my plan that hope is all I've got. I've been there, Trina. Everybody in this room has been there. Not everybody has the courage to show it happening. I love your entry. I'm so on board with you until you chose to not exit when the advantage was gone. Good job. Odds favorable, clear path, strong top, perfect entry, never gets out of the retracement zone, and there you capitalize, and there you make your money. Nicely done. And the second one got you break even. So it happens sometimes, right, Trina? Sometimes we're like, what plan? And then you're like, wait a minute, my system works. Let me stick to the plan. And I love it. I love that you came back from it. One of the most challenging things, I think, is when you take this trade and you abandon everything, you're more likely to continually break your rules to get it back. And Trina, the fact that your next trade is perfect. The next trade makes sense. The next trade has everything you need. That's good stuff. And there's your reversal bar, right? You could have moved your stop behind it, but as long as those rules are met, you're still in a range for down. And that's kind of an awesome read on the charts. That's an awesome understanding that with momentum and path, this is where the market shouldn't go. And maybe you can hold a little longer. Beautiful, beautiful job. Weak bottom, potential to break, no divergence, perfect entry, quick profits because it's not a perfect trade. And then Pete, if I'm not mistaken, that divergence became true, didn't it? And when it did, down it goes. So man, I feel like Pete's going to get a big head today because I keep throwing a lot of love at him here, but I want you guys to see how this works. This area is not broken. It's got the potential to break, but it's not. I'm coming from a bad bottom. The potential goes down due to that. So what Pete does I'll take the perfect entry, get paid fast, and not hope. It's only potential. Is that fair? And you're on sim now, right? But you're still treating it like real here. Trailing stop to the rescue. Once you're up, you're not giving it back. And guys, this is just chart reading, right? He knows he has momental. There you go. That's a word. So it has the potential to break. But he says to himself out loud in the room, scaring the heck out of that cute dog he has, it's only potential. It's not a good bottom. I'll take the great entry. Because if it breaks, man, Zoomsville, population me. But if it doesn't break, I don't want to be there for the failure. I just want to get in, make a little money, protect myself, and if it goes, great. And if it doesn't, whatever. I've been racking up the duckies all day long. Nice job. Does that make sense, everybody? One thing that we're seeing, momentum and path, it seems to be easy. Once you take away one of those two concepts, guys, you got to get your management hat on. You've got to get a little more aggressive. Okay, this is NASDAQ. Odds favorable momentum? Absolutely. Clear path? 100%, Joel. It hasn't reached the divergence high. Pull back to the area inside of triggers? Beautiful. What a great looking trade, Joel. Nicely done. Does everybody see it? This is everything we've talked about. There's your strong bottom. There's your momentum. Notice that the top of the bar didn't hit the pink area. It's like 4 ticks away, but it's not there. Beautiful pullback. In at the area inside of triggers and out just before trouble. What an outstanding trade. Nicely done, Joel. That is the perfect NASDAQ trade. Nexgen, not a strong bottom. 50-50, no divergence. Error you made because you didn't close on the break even. Made a mistake here, but happy to show did not move my break even stop loss. Why, you ask? Cat moved over screen. That cat. Waited for the reversal bar because the rules are not met 50-50. That cat. Do you guys remember when I said a confirmation bar is only a confirmation bar if the rules are met? It's only confirming that the trade's going the direction because the rules are met. So I like that you called it a reversal bar. But Jen, I'm gonna talk about something here real quick. If you're willing to take this trade, the risk that you have from here is less than the risk that you have from here. So on a 50-50 scenario where you're breaking rules, give yourself the least amount of risk. Does that make sense? If you can say to yourself, egads and little fishes, it's not perfect, give yourself the smallest risk. That way, if it does fail, you're out a couple ticks instead of a couple points. You're welcome. Thanks for posting. The fact that you guys will post losers, I think is incredible. When I started with Nexgen, and not as an employee, as somebody that was trying to become a day trader with them, when I started with Nexgen, my brother was super clear with me. I mean, crystal clear. He said, this is all you need to do, Mark. I'm going to give you some rules. Write them down and learn them. And he goes, with those rules, I want you to do me a favor. I want you to go back and I want you to, well, crude oil may not have it. When the rules are met, I want you to circle those tails and make sure that you really know, Mark. Make sure that you understand what it looks like to have your best entry. That's the one Morgan rock starred all the way up to Fibonacci resistance. He goes, but don't just do it once. He goes, I want you to take pictures of it, and I want you to put it in the spreadsheet that I'm giving you, and I want you to say, this is my perfect look. These are the rules for it, annotated on the chart. And he goes, Mark, I want you to do 10 pictures of longs, and they should all look the same. and I want you to do 10 pictures of shorts, and they should all look the same. And that was the first thing that he told me. And I'm going to be honest with you guys, and I hate it when I have to be honest and expose myself like this. I didn't want to do the work. My last name's Novak, damn it. I'm entitled to be an amazing trader because I'm John Novak's brother. It doesn't work that way. So when he said, learn the trigger line and Fibonacci rules for when it's okay to trade, I politely declined. And I played on simulator. And he said, Mark, post your pictures in the room that I'm teaching. Do me a favor. Every trade you take, just drop it in the room. And we'll talk about it. And if you're making mistakes, dude, I'm going to point them out. I'm going to teach you how to fix it. He goes, but you can't send them to me on Skype. You can't email them to me. You can't call my phone and say, John, was this the right trade? He goes, just post them in the room and get feedback. He goes, within the first couple of weeks, man, you're going to find your groove. And again, I didn't. I didn't do it because what if everybody in the room saw me take a loser and my last name's Novak? Guys, that would be horrific. How do you survive something like that? So I didn't post in the room. And because I wasn't taking pictures, I didn't fill out my spreadsheet. And I made this choice. This was my choice. And let me show you what happened, guys. And this is how education can go for most people. You get in and it looks like fun. And you're like, oh my gosh, I can't wait to be rich. I can't wait to be a day trader. I want a Lamborghini. I want a big house. I want dogs that aren't even real breeds, right? And then you realize that you're going to have to learn rules. And that's me telling you, learn the rules, learn the rules, learn the rules. And you're like, oh, cool. I'm going to get lucky a little bit. I'm going to rock it out 30 days in. Because I got lucky on Sim, I'm going live. And guys, there was a time where there weren't proprietary firms. There was a time where you had to put your own money in the market. And I had a $6,000 account. That's what I chose to trade with because, man, what a buffer, right? How does that go wrong? And I was like, I got it. I'm good on Sim. I've never gotten feedback. I don't have a trading plan. I don't have entry rules. I don't have exit rules. Hell, I don't even know why I'm doing what I'm doing. And guys, I got knocked down. I lost $5,000. I think this is why John built this picture. I lost $5,000 over the course of about 2 hours. I took 21 trades. I had no idea why I entered. I had no idea why I exited. And guys, it was fast and it was humiliating and I was dejected and I was mad at my brother. True story. I was mad at John Novak because I just lost $5,000 with his damn software. And we talked about it because siblings do that. And he loves me and I'm lucky for that. And he said, all right. He goes, you did it your way. You did it your way, Mark. Let's try it my way. So I want you to go back and I want you to go take those pictures. And I want you to go back and I want you to learn these rules. And I want you to participate in the room and I want you to get feedback. And guys, on my spreadsheet and the trade tracking sheet, the one that was there initially, way back when, I don't need those files for later. It was filled out and it gave you places to put in your trades down to 279. I still remember the number like it was yesterday. And it was at number 279 that you either had to go beyond it or you had to make a new tab and repeat it. I filled out down to 279 3 times before I went live again. 3 times, almost 750 pictures, simulated trades. That's how bad I'd gotten beaten up. That's how scared I was of the market. True story. And guys, this is hand to God. This is the truth. And I stewed at this I don't know shit level for about a week before I got my poop in a group and started doing it. But once I did that, I got my entries down. And I told you guys earlier, I got my entries down. And my entries were good. I was so stinking good at my entries. But I hadn't worked on a management plan. The only thing that I worked on was entries. And I told you guys this, and I'm going to tell you again, and I'm going to show you exactly what I would do, is I would get into the market perfect. And as soon as it got right here, I would go break even because I couldn't stand the idea of losing money again. And they would go dink, boom. And I'd make $5 on the trade. And I thought I was amazing for that $12.50, whatever it was. Um, so then what I realized is that I better come up with a management plan. And guys, everything that I teach in this room, I promise this, everything that I teach in this room, all of the simplicity, all of the focus, all of the demanding, not demanding, I'm not really demanding, but all of the ideas that it doesn't have to be difficult is 100% derived from the challenges that I had right here on the backslide by not following the path. So if you start, and I know this sounds funny, if you start at the I don't know shit stage and you follow that very simple path, you get to the I did it stage a lot faster. And I think a lot of people don't realize that about me, that I didn't just become this magical chart reader, guys. I had to go through the pain, and I teach this class based on the pain that I experienced, the fixes that I learned, and the struggles that I had. And I'll tell you right now, I didn't have I didn't have the $5 grand to lose. We had sold a house, and I was so convinced I was going to be a millionaire by the end of the month that I took the $6 grand out of savings and opened the account and was humbled instantly. So um, I like to share that every now and then. I like you guys to know that there is an easy way to do it. Learn to read your indicators first. Write a plan. Have a plan, and then execute the plan. Better Dad, food for thought. You did the math on how much you're trying to get. If you took $500 one time in an hour, your insignificance to the market is a lot of zeros, 22% of cash of that hour. Don't fight them. That led you to Mark Douglas and back to Nexgen. We all have our own process. Thank you for sharing that. Some of the most powerful traders, not powerful, I say successful so much, but the traders that I work with that are finding the highest success are the traders that have learned that they are insignificant in the market. They're the traders that have learned that their opinion means nothing, that they don't have to be in every move. They're the traders that learn that they don't want to jump in the way of the large crowd. They don't want to be in that decision-making process. They don't want to be in the fight zones. And they're finding their ways through patience and through very specific rules to capitalize on what the indicators are telling them. And guys, we all go through the journey. We all do our own journey, and we learn these different things. And you learn them in your own pace. And that's one of the educational wonders of the Nexgen room here is you don't have to do it alone. I'll work with you every step of the way. I'll hand you a plan. I'll teach you how to study it. I'll show you what it looks like real time. This is strong triggers. This only has the potential to break. Divergence is one of the biggest killers of this trade, even from a strong bottom. On the plan that I give you, it says this is more likely to create a loser than it is a winner. It will win, but it will lose more often than it wins. So now you have to make the decision. Is this my trade? Is this where I want to take a chance? Is this where I want to risk money? Look at that. You just lost. But your rules were there to keep you out of that loss. Jen, you posted 2 or 3 pictures like this yesterday where you said that divergence says I don't want to take this trade. And it's not because it doesn't win sometimes. Guys, it does. But it does this more often than it wins when that divergence is present. That's how plans are built. One of the things that pissed me off so much when I was a brand new user, and excuse me for saying that, was when my brother would teach the room, and it's not his fault, it's my fault, and it's my reaction to it, is he would say, it's obvious. And I don't know about you guys, but when I started learning this, nothing was obvious. Momentum wasn't obvious. Path wasn't obvious. The fact that price returned to the large triggers wasn't obvious. The entry wasn't obvious. But there's a way to make it obvious, guys. And the way to do that is to learn to read your indicators, to recognize the patterns, and to say that there's a time when you have the advantage and there's a time when you don't. And I am behind the pulpit. I totally realize that. But guys, we all have the same story. I don't care who you are, where you are, what you do, why you do it. We all have the same story. We've all learned some rules. We've all broken some rules. We've all won some money. We've all lost some money. And when you go through that process, when you go through that spin cycle, eventually you get to where you're winning more than you're losing. And that's the goal. So strong bottom. Steve, you're going to hate this, but I have to disagree with you. And we'll turn it into the lesson. In order for this to be a strong bottom, these large triggers have to turn green. They didn't. Not at all. So what you have is a termination condition. Does that make sense, Steve? And this is just me going back to language for the people in the room. The only way to have a strong bottom is a no triggers through termination. We absolutely have that. But those large triggers have to roll. Doesn't mean it's not a great trade. Back in 2004, yeah, I know, 2004, we've been doing this for a while. Nexgen taught a trade. And it said that when a Fibonacci area holds and those small triggers roll on the large chart, buy a pullback to the small triggers. This was the original take advantage of Fibonacci trade. Well, what that pullback to the small triggers looks like is that pullback to the large triggers on the small chart. Steve, you did it perfect. It's the same trade that Nexgen started teaching. It's not a 50-50 trade, because a 50-50 suggests that the area has the potential to break. Your large triggers are below it, your small triggers are below it. It's capitalizing on that termination condition, letting the small chart show change through the large triggers rolling, letting the large chart show change through the small triggers rolling, and it's textbook what we were teaching 21 years ago. But it's not a 50-50 trade. It's just taking advantage of an edge. Nicely done. It's a great trade. Absolutely. But I do go back to the terminology. Great stuff. Let me figure out where we're at. 935, 935. So all the triggers down. Strong triggers pull back to the zone, momentum trade. Not strong triggers pull back to the zone. Can't be momentum, Steve, if it doesn't have momentum. So your first one with strong triggers, perfect. Beautiful, beautiful entry. No momentum. And it breaks and retests, and that's a good look, but it's not a rules-based look. And it breaks, it doesn't even break. It's sitting right inside the zone without momentum. So these two, Steve, do you see how they're missing the separation and the triggers? Can't call them a momentum trade. But this one, perfect, 100% perfect. I love it. And you may end up taking these eventually because of the large chart. But once it gets to 55.50 right here, do you notice that it's at that zone? So what you did here is you traded momentum to get to the zone. And then once you're at that zone and you're losing momentum, these become much lower probability. Good looks, man. I love that you're starting to study this. And the zone holds and the triggers roll and we're above the zones. Small chart is going up with momentum and beautiful. Right back to the HVA, right back to the one-to-ones. There's that momentum trade again, right? Nice. You have room on the large chart. You have momentum on the small chart. You've got a clearly defined area for entry. Beautiful. And you chose to skip the trend trade because the large chart didn't have a clear path. Steve, you are picking up and you are picking up fast. And guys, I told you, most of you are going to latch onto this momentum trade. It's so easy to see in the moment. Great job, man. Great job. You're welcome. Andy, are you still in here? I realize that I didn't get to your pictures this morning, and I meant to, and I apologize for that. I did so much stinking posting that I forgot to look at yours. Let me get the one that shows the bottom of it. Actually, we'll get both of them here. Because I like what you did. So allowing the large chart to lead the way, allowing the large chart to have momentum, to have a clear path. Everything is beautiful. And this is just like any other chart. Once you have momentum and path, you're going to find a way. So the question was this early? You were shooting for the mid-band, right? And it just didn't get there. Did you enter on the good side of the small triggers? That's the one thing I think that you did. That's early. Yeah. Actually, you know what? So Andy, taking this pullback to the one-to-ones, trying the momentum trade right here, would have been a rules-based trade, 100%. Momentum and path, momentum and path. And it just didn't work. That would have been a failed momentum trade. And then when it's trying to get down to that mid-band but doesn't, once it gets above those small triggers, you're on the good side of it, it's pretty easy to capitalize. So even though it didn't quite make that mid-band, you had the large chart advantages and you simply were just a little bit patient, waiting for the small chart to catch up to give you that indication. I think you did it great, and I think that it is a good-looking trade. And then I did the same thing because it set up right after. And this is pretty cool. Yeah, and man, Andy, they'll get you on that. Trust me on this one. Trying to anticipate the close will backfire on you every now and then. Because this one didn't close below, and it shot all the way back up to here. But then when I get the one that closes below, it's pretty easy. And guys, this was a 4 lot. Look at the large chart. This isn't, I didn't have an area to trade off of, or trade from, excuse me. I was looking for these one-to-ones. I was looking for a mid-band. I was looking for a trend trade, and my small chart just couldn't get there. But once it got to the good side of the triggers, I said, all right, they're turning, we're heading down, let me go down with it. And guys, that was profit reached pretty quick. It really was. So this one doesn't even fit a plan. And Andy, I did that because it's the exact same look you had here. It's all the momentum, and just wait to get to the good side, right? Sometimes they overrun, they're 1 minute. Yeah, well, you're gonna lose, right? So the idea, Andy says, for those of you that aren't reading but just listening, Andy says, well, on the other hand, I've been had after they print as well. Of course you have. We don't win all the time, but we can keep from fighting with just a little recognition on those triggers, just a little peek, getting to the good side. And it's amazing. Those triggers tell the story, guys. And I'll show you what I mean. I did one right before news. I did it on purpose. One of the things that I'll do on Simulator, guys, is I'll lose trades intentionally to make a point. And this is a good one. Everything says down, the path is clear, and I'm looking for the mid-band, the trend trade. And Andy, I thought it was going to close below, so I jumped in. And it never did. And the triggers were strong, and it blew up, and that was news. But one of the things, it's easy to say, I think it's going to go down, and it's another thing to say, my indicators say it's more likely to go down. One of them is your advantage. Steve, you found out need to set up live account with TV, even for paper trading. What is the process to set it up? So what you're going to want to do, Steve, is you're going to want to Follow instructions. I love it. um, Once you get your indicators, all that good stuff, activate your free trial. Set it up. Populate your indicators. Market flow requires premium. Hold on, we're going to get there. Where did it go? You're going to have to sign up. That's where it is right here. You're going to have to sign up with Nexgen to get your demo. And from your demo, Steve, you're going to get a link to set up CQG data. Okay. But you're not getting live data. And remember, guys, I'm not the trading view guy. I'm the indicators reading guy. Are you delayed on your data? Show me a picture of your screen real quick. Hold on. So you have live data, but it won't let you paper trade. So if you go to trade, whoops, wrong one. Let me log out. So if you click this little up arrow down here, Steve, does it give you all of these options? See, I've got my AMP, my CQG, that's my favorites there. But I'm not logged into it. It won't let you do paper trading. Can I paper trade? Why can't I log into my paper trading? Your live account has been migrated to a different legal entity. In that case, your old paper trading account was closed. Your new paper trading isn't ready. Your paper trading is closed due to activity. Your live account is closed. In that case, your trading account will also be closed. You have an older account and never activated. So that's one of them. So you need, is it telling you that you need a broker? Yep. All right. There you go, Steve. I'm going to send you to my tech department. I don't have an answer for you. I don't know the answer. So go to the Nexgen Pro Trader funding, click on that tech thing, and Jason or Jose will get you squared away. Awesome. Again, I'm so good at reading indicators, Steve. They didn't include me. The only understanding I have of TradingView is the understanding from my own time in it. And I was able to set up everything beautifully because what I did is I signed up, and when I signed up under the Pro Trader funding, I didn't have to buy an account yet, but what it did is it linked me to that CQG, and by linking me to the CQG, I guess that's probably what did it for me. That's what made it work. So, guys, you can create an account with Nexgen Funding without having to buy the account yet. And I believe once you do that, and my brother went through and he created one for me, so I don't have it. But what happens is, let me go over to my email over here and go back to my trash file. So what happens is when you sign up, you get the welcome. You also get the welcome to CQG platform, and you'll be able to sign up to be a part of that. And then when you choose to buy accounts, apparently I have an account. My brother did all this for me. So it starts with setting up with Nexgen Pro Trader funding. And then it goes to CQG. And then if you want to buy accounts, you buy accounts. So I'm guessing that you haven't signed up at Nexgen Pro Trader Funding, in which case you're probably going to have to. That's one of the things that Pro Trader Funding does for you, is it introduces you and gets you set up with CQG to get those credentials. Okay. You don't have to buy right off the bat, Steve, but getting in there, you get the demo, all that sort of stuff. You can go through it. And that may be it. But again, I'm going to say, double check that theory with the people that are designed to help. And I think that may be where the disconnect is. I don't know for sure, but I'm just trying to work through it logically. And I feel like that may be where the disconnect is. Because I do have, but I'm not even logged into my CQG, and I can do paper trading. So I don't know if that's true. I would knock on Jason's door. Sorry, I know that's not the answer, guys. I'm not going to have all the answers, you bet. But if I don't, I can point you to the guys that do. There are so many people in this world so much smarter than me. I'm pretty good with a lot of stuff, but I don't have all the answers. And that's just kind of a hitch. You could also call TradingView and go, hey, TradingView, what gives? I've got my stuff. I've got my indicators. It won't let me paper trade, and force TradingView to give you the answer. You're using their platform. It's okay to use their tech department as well. Hamid, we just went through all of that. I've got the $7 live feed too, and I have absolutely no problems paper trading. I have absolutely no problems logging into paper trading, hitting connect, and simulating. So if your world is turning the same direction as mine, I would say, yeah, you shouldn't have a problem. But if you've got something going on like Steve has going on, I would encourage you to reach out. But the first thing is try to paper trade. Click on it, see what happens. That'll answer the question. Hate not having very deliberate answers for you guys, but sometimes we got to work through it. Hamid, have you tried to connect to paper trading yet? Well, then why did you ask me if you could? You already knew the answer. Silly. You knew the answer. All right, guys, we're going to do a little, for you guys going over to TradingView. Just a little reminder, guys. The indicators are the indicators, right? There's no difference. You out of here, Cav? Have a good one, man. Triggers are always triggers. They're going to be used to define momentum. Divergences will always be a loss of momentum. They could behave as termination conditions. Have a great one, Cav. One-to-ones can always stop a market. You see them in advance. Mid-band is always the mid-band. That's where trend trades come from. So if you are sliding over to TradingView, guys, you're not really jumping into anything new. It's just dressed a little differently. The one addition is that we couldn't write Fibonacci, guys. We couldn't write John's Fibonacci algorithm into TradingView. And believe me, he had a lot of programmers try to no avail. So because it's important for him that you guys are comfortable, he grabbed that concept from the Ale course, that supply and demand, those areas that are reflections of the emotion, the enters, the exits, and you've got these zones, supply and demand. You can trade to them, trade from them. They are not Fibonacci, but for the Nexgen user, it's the same mindset. There's no reason to trade into an area. An area can stop the market. That's going to be the new thing. And it's not dynamic Renko bars because, again, they couldn't create the dynamic Renko to make it look like you're accustomed to. So Nexgen has gone to the tried and true method that they began teaching on in their minute charts. You've got a 15-minute and you have a 1-minute. Big chart, little chart, slow chart, fast chart. Overall chart, entry chart. And then John and I worked a lot on creating a trading plan for you. So this isn't just us going, hey, this kind of looks like a trend trade, let's do it. This is us testing in pictures. And, I would say probably 1,500 of those 3,000 pictures this year are TradingView study on my end. So you've got your workspaces. You've got the link to get the zones should you choose to use them. They do create an advantage. And this tells you your 15-minute chart is your roadmap for key targets, guys. It defines how you're going to use that chart, what it's used for. Your 1 minute with the market flow is going to be your entry chart. This is where you're looking for pullbacks. This is where you're looking to get in. Entries are taken from mid-bands, HVA lines with momentum. And guys, these are your entry areas per the plan. It doesn't mean that you won't have a different plan. Andy showed a great trade that didn't fit this plan, but it revolved around momentum and path. And then we give you the checklist, guys. The checklist of how to enter. And that's all. It's just entry rules. You're going to have to work on management. That's going to come through a little bit of time and a little bit of practice. One thing to help you with that is I've created this spreadsheet. Let me drop this in the room. And this spreadsheet is the HVA trade that follows the checklist rules, and the trend trade that follows the checklist rules, and the momentum trade that follows the rules. And then I've put some ideas on management in there, little things to help you out. Terminations when you're not looking to take any more longs, when you're not looking to take any more shorts. It even has trade tracking if you want to track your TV progress as well. So that's all available for you. And then I'm going to give you this one. This is the PDF version. I'll open this up and we'll go through it. There's also a PowerPoint of what we're about to talk about. And then you're good. Awesome. It worked for you, Hamid? Perfect. I'm glad it worked for you. It didn't work for everybody. I don't know why. I don't know where it came from or how they got it, but it worked for some and not for others. So guys, this is the intro to TV. This is the high volume area trade. And these rules are going to sound very familiar. And let me say real quick, Jared, Ronnie, you folks that are brand new, I'm leaning into TradingView now and off of NinjaTrader now because Nexgen, as of yesterday, launched their funding company. You're going to have the opportunity to use our money to make money, but you can't do it on NinjaTrader. You'll need a platform like TradingView. So John Novak and I, because education is so important to us, mostly to him, that's what he's done for 30 years. He and I worked tirelessly to create this plan. So you guys that are making the transition, we're trying to make it as easy as possible, as smooth a transition as possible. Everything that I'm showing you right now was designed to make life easier on Nexgen users. There are 60 million users on TradingView, guys. And Nexgen users are a drop in the bucket, but you're ours. We take ownership. So we want to make the transition easy, guys. High volume area trades. Zone reached on the large chart. 1 minute rolls, buy or sell a pullback to the HVA line on your entry chart. So it begins, price reaches the zone, price reaches one-to-ones, price reaches divergence lows. Your small chart has to show you change. The fast triggers have to get below the large, they have to be angled down. This is telling you that this area is more likely to hold. Your 1 minute chart with market flow attached, if you don't have the premium membership, you don't have market flow, you can't take an HVA trade. If you get a breakout bar, a white bar off of these great areas, it creates this magenta line. This magenta line is a line in the sand where the seller said, we let them get there, we took over, this is where we'll unload both guns blazing if the buyers try to go back up. And selling this HVA line creates a nice run off of this termination. That's the first trade. The second trade is the trend trade. No areas reached on the 15-minute chart. No areas reached on the 1 minute chart. Clear path sure sounds familiar. Buy or sell a close on the correct side of the small triggers at the 1 minute midband. And what you're going to realize is that you'll be able to tell that you haven't reached an area. And you'll be able to tell that you haven't reached an area. And this is where the patience comes in, and this is where TradingView using a minute chart differs a little bit from those dynamic Rinkos. is up. Take care, Trina. Great trading today. Price reaches a mid band, but the best lesson I could ever give you guys is don't feel compelled to fight these fast triggers. It's hard to win. It is so hard to win. So the rules say let the market close on the correct side of those triggers, and that's your trend trade entry. And that's the only difference. We're not trading an area inside of triggers. We're trading the area with the close on the correct side of the triggers because you don't want to fight that momentum against you. And then finally, the momentum trade. And this is what Steve showed us, and it was beautiful. Nothing in the way on the big chart. Both charts have strong triggers. Buy or sell a pullback to an HVA line, one-to-ones, mid-band. So when everything is screaming up, most redundant pictures ever, you're buying a little snapback right to that area with strong triggers. And then just one more real life. Steve's trade was perfect. Everything says down and strong. There's your momentum. There's your snapback. This time it uses a zone rather than the one-to-ones. It could use an HVA instead of the one-to-ones, instead of the zone. So there's a couple options for entry. But what you're doing is you're insisting on that momentum and then heading in the direction of all the momentum. So that was dropped in there as well. And the way we're going to run this right now, because honestly, I don't have enough to create a class specific to TradingView. I don't have enough participation, enough questions about the trades. So this last hour, I always put it in and we talk about it. So if you have TradingView questions, let me know. Guys, if you have NinjaTrader questions right now, let me know. I'm still running right now. But I hate to admit it. It bugs me to admit it. I'm not a TradingView expert, but with 60 million users, there's an amazing database of knowledge. Take advantage of it, guys. Go through that help center. Ask every question you can and try to find answers. Go through the mechanics. I'll do everything in my power to help you. I'll hold hands as long as I can, but there's just some answers I don't have. And I think what you'll find is that they're not difficult to find with just a little bit of elbow grease. Told you a fib and not a Fibonacci. I cannot use NinjaTrader as a broker outside of Ontario, but you can use the platform in a different broker. I used to use AMP. Awesome. So you can use NinjaTrader, but with AMP, not actually NinjaTrader. That's awesome. I had a feeling because we've got Canadians that use it. So good. I'm glad to hear that, Russ. I like that. Told you a fib and not a Fibonacci. I see what you did there. You got dad jokes, Russ. You got dad jokes. Good stuff. That's great. That's good news. Guys, I don't care which platform you use. It doesn't matter to me if you're on NinjaTrader and you're watching that with dynamic wrinkle bars and fibs. It doesn't matter to me if you're on TradingView. It's cool with either, like whatever, because I'm glad that you're using something. So here's the cool answer, Russ. People either love this or they hate it. So this negative number right here means divergence is true. That's it. It means it's true. If that negative number prints, divergence is true. There was a loss of momentum. It's a byproduct of the calculation that the software runs behind the scenes using the MACDs, using all of that. Hey, Steve, have a good one, man. Let me know what you find out about the paper trading, because then I'll have the answer. I just don't yet. I'm trying to build my knowledge base too. Have a great afternoon, man. And Russ, the way that John Novak taught me, because, Novak men suck at analogies, divergence is like being pregnant. You either have it or you don't. You either are or you are not. So this negative number, it prints because of the calculations, but it's not referencing anything. It's not making it stronger or weaker. A big number is not better than a small number. It just means that it's true. So it prints in conjunction with the line, and it just lets you know that divergence was true. And most people want a better answer than that. Most people want to hear something different. David, I've got the worst analogies. I know that I do. But I sure do have fun with them. My wife laughs at me. My wife is like, oh, Mark, come on. Guys, I just made one of the cardinal sins. I closed out my chart. I didn't close out my workspace. I don't have a small chart anymore. Let me show you how to fix that. If you ever close out a chart on accident rather than closing the workspace, go close your workspace, and when it asks if you want to save it, politely decline. And then what happens is, because you didn't save that mistake that you made, when you reopen the workspace, it's going to come up with both charts. That's a trick that took me a while to learn. So there's your secret handshake for the day. David, I think because I tend to think more creatively, I don't think logically typically, not just off the cuff. That's why the large crowd, small crowd appeals to me, because I can visually see a large crowd pushing the market, or I could see a small crowd fighting the market. And for me, it makes sense because it creates like a story, a parable, or whatever. And my analogies are kind of a result of that. I make things up in my head that make sense to me. And what I find is 90% of the time they don't make sense to you guys. But when I stumble on a good one, I try to hold on to it and work it into trading. So anything else I can do for you guys today? This particular market has a bad bottom. It has reached Fibonacci resistance. All the triggers are below. You don't have a clear path, even with all the momentum. I don't have momentum because my smalls are below, the background's red, the triggers are green. Don't have a clear path. Don't have the momentum needed to break it. I'm in a holding pattern. Guys, that's it for me today. Thank you for being here. Thank you for your questions. Thank you for your posts. Ronnie B, remember, tomorrow's easier. Next day's easier. Guys, my email works. You're more than welcome to send me a message in Discord if you need to, but I want to let you new guys know, Nexgen employees will not send you messages in Discord. We will not reach out to you. We will not offer to trade for you. We will not ask you for crypto. If that happens, even if it has my name, it is baloney, grade A baloney. We will never solicit you for money via Discord. We will pick up a phone and ask you for your credit card number. It's what we do. Guys, have an amazing, rich and famous. It gets better, doesn't it? It doesn't take long. It doesn't take long to get past this. Thank you for posting that in there. It does. Every day it gets easier and easier. We can send you money. That's awesome. Good stuff. So rich and famous, your next job is to go beyond focus and listen. Your next job is to post in my room. Even if it's this, even if it is taking a picture and saying, hey, Mark, is that a termination condition, right? Let me know that we can have a conversation. Let me know that you're willing to ask questions. And what you'll find is that you'll get to where you want to be a little bit faster, because I did it again. Any questions that you have, we'll make sure that it get answered. So good stuff. All right, guys, I'm out of here. Let me post up